Hello. Now let me see some audio stuff, guys. Input, output, input. Go. You guys hear like pretty good with this? All right, cool. All right. All right, can we see? Thank you, Kim. Okay, cool. Honestly, I want to put a timer on this. I'm not gonna lie, dude. How do you put a timer on here? TWX, can you do that? Just put like a 30-second or something. A timer. Can you put a timer on this chat? Oh, there is one? Oh, damn, dude. I guess I just have privileges here. Okay, 30 seconds. All right, that's cool. All right, cool. All right, guys. So let's just wait till a couple more people get in. But guys, in that record, that's what we're going for. It's on 10s. I mean, that's fine, I guess. But if you can put it to 30, yeah, do 30. But yeah, today we're gonna be going over like basically my approach. Some of it isn't like we're just gonna kind of go off the fly here. It's kind of like a general approach. Garrett. Oh yeah, I got a notification. Nice. Yeah, well, I'll start doing this stuff here. Okay, so let's go ahead and start. There's quite a bit of people here, so might as well start, right? Yeah, don't try. All right. Yeah. So I'm gonna get through this briefly, and then we'll go through questions. So hold your questions for now, okay? Try to hold your questions. All right. So the general, right, two concepts that is necessary to any model is going to be phases of price, and it's going to be open, high, low, close, and kind of using the two concepts blended together. Okay, so this is what I look for personally. I want to find a draw here, right? I want to trade away from a protected high or low, which requires manipulation, right, to get expansion into that draw. So, like I said, right, the phases of price, right, which we want to trade as expansion. That's the only phase that we ever want to trade, and that requires manipulation for us to anticipate expansion, right? So this is the general model on any time frame. Okay, you want to have a manipulation of a high or a low. Okay, you want to have an SMT. You want that to be aligned with a profile, like a weekly profile. This example here, an expansion candle supporting that weekly profile, and a CST, right? SMT, CST is like your confirmation here. So let's say, right, that we're trading on weekly open, high, low, close. In order for us to feel comfortable to actually anticipate an expansion throughout this week, for one, we need this weekly candle to have that small opposing run supporting expansion, right? We also need ideally a profile, right? We need an established low to be set on a specific day to where we can go in the next following days anticipating expansion away from that manipulation. So it's going to look something like this, right? So it's really just, again, high or low to trade away from to get towards a draw on liquidity, an objective right here, right? You're going to look out into, you're always trading with one candle, right? A weekly candle and a daily candle. Right? This is really what we're really focused on, right? And the profiles and the way this candle forms supports this manipulation and idea. And inside of these expansion candles, we're going to look for the same thing. An established low of the data form, right? Profile development is a confirmation to a bias, and it can provide bias, okay? And we're going to specifically be focused on London session and New York session. But New York session is going to be the easiest. Just like Wednesday, it's going to be easier than Tuesday, right? Thursday is going to be easier than Wednesday, and the week, the days prior, because you have more to look back on that gives you context, right? So like up here, aligning a manipulation model, right? So the manipulation is the model essentially, and the expansion candle and profile supports that model. So we trade expansion. Manipulation is the trigger for expansion anticipation, right? So again, daily profile supported by what? A daily candle, that small opposing run. You can't have one without the other. You cannot have a classic buy day if the opening price is way over here, right? This can't be a London manipulation, right? Because the daily candles support expansion. Does that make sense? So let's talk about a little about swing points, right? Next day model. This is also fractal. All right. So let's say we're kind of just trading within the week, right? We don't really have a bias, but we form a candle two closure. This can be any time frame, by the way, like I said. So in order for this to be a valid candle two closure, because we don't pattern trade this, we need to see a manipulation for the next day to trade away from, right? Our next candle doesn't matter what time frame, like I said. So in this next candle, again, all time frames, we don't necessarily need to see manipulation. You're going to always open up near an invalidation level. This can be for a 930 reversal. This could be for anything. Once an established low has been put in, we want to see generally the same thing. We want to see opposing candle support price. We want to see this open against small opposing run. It's going to open near a reversal point, essentially, in a validation area. If price was to disrespect this, right, this wouldn't necessarily be bearish anymore, right? Because then we're just trading away from the opening price. We're starting to eliminate that idea of a small opposing run. So really, there's a lot of times it's going to be only like one place for the low to form. That's what we want to see. Ideally, manipulation occurs inside of this wick of whatever candle you're trading. But sometimes there's going to be an area. Maybe it's a fair value gap, like a range. But a lot of times it's an opposing candle. So you want that to form there, ideally at a relevant time, right? A profile, like if it's London or something, we form an opposing candle off that, right? If you're in the lens, you know what an intracandle CSD is, something like that, right? To then trade expansion, right? Because if manipulation already occurred, we don't necessarily need to see manipulation in the following candle. We just need to see expansion, right? We need to see small opposing run and some sort of confirmation and file confirming that, right? And then inside of this candle here, away from the manipulation, what do we want to see? Opposing candle support price and fair value gaps too, right? You're going to refer to these as continuation redistribution. So that's pretty much the premise of what we look for. Now let's go over maybe some, I have a ton of examples here. So again, that's not really all we're going to be done with. A ton of examples. All right, so when we look at the weekly chart here, what do we see? Let's think about phase of price, right? We have 3 consecutive expansion candles into an objective. So when we expand into an objective being a high or a low, or maybe EQ of a range, right? Something like that, right? You can expect a new phase of price after this expansion. So when we get this small opposing run, right? SMT, right? This is what we can anticipate this being bearish, right? Because like I said, what do we need to actually get expansion like that? These 2 days of expansion, right? Manipulation, right? So an SMT is manipulation. So whenever you want to trade back into a range or out of a key level, so away and towards, it's the same thing. So let's say we have a range. We don't want to trade retracement. We don't want to trade this, right? Because what is this? Low, choppy, PA. We want to trade expansion at all times. So what is required to expand back into a range? It's going to be manipulation. It's as simple as that, right? And then what do we align this with? If this is a daily chart, we're going to align this with not only daily expansion candles away from the manipulation point, as we see here, we're also going to align this within a weekly expansion candle. So if we go to the weekly chart, do we see that? That small opposing run? Yes, right? So you see how we're aligning this weekly profile, right? Monday high of the week, but it's really Wednesday high of the week if you really think about it, because this is the manipulation. And we have that weekly candle supporting price, right? So coming into the day, if the previous candle manipulated, then what do we want to see Wednesday or Thursday do? Expand. And then what are we forming? A swing point, right? When we drop lower. This is where intraday profiles come in, right? So what we have here is a manipulation, right? So the profile, right? Ideally, we want to see manipulation or some sort of opposing candle supporting price. I wouldn't even refer to this. It's really the manipulation that's important. So when we look at if we break down price in candlesticks as we do, right? We have what do we have here, right? Like I said, we have that weekly expansion candle, right? We have manipulation at the high of the day, a 6 a.m. candle manipulated. So if the 6 a.m. candle manipulated, what will 10 a.m. do? Expand, right? Look at the opposing side of manipulation always. What do we have? Failure swings. We have Asia low of the day. This is one of my favorite profiles, is when Asia is low of the day and we manipulate in New York. Because this is when we can actually, I'm a New York trader, so I want to catch the majority of the daily range, right? So if, let's say, London manipulated and also expanded, then I'm not really interested in New York because I want to trade the majority of the expansion, right? So when we see this, what's our confirmation? Always, right? So we have SMT, right? That's our confirmation. Manipulation with SMT. That's two of the things we need to see. We need a candle, like the weekly candle is in support of our idea, right? The weekly profile and the daily candle as well, right? And the daily profile. So everything is aligned here, right? So when we look at 930 as a driver, what do we want to see opposing to our draw? If there is no manipulation prior to 930, we want to see 930 reverse. That's what we do here. Again, 930 opens up, we create SMT, and then we close below aggressively. So if the reversal for the day has already been formed prior to 10 o'clock, what do we expect to trade? What do we expect the 10 a.m. candle to do? Much like if we expected the previous day to manipulate, right, on Wednesday, what do we expect this day to do? Likely reverse, especially with 930. This day fails to reverse. We have 830, 930 kind of failing to reverse. This was the only area for price to reverse from, and it failed to do so. So, like, I'm not getting into that real quick, but yeah, like I said, everything is aligned at this point. So now you can just literally slap on a trade on the lower time frames at this point. You can market execute prior to the 10 a.m. open, 10 a.m. open, and in anticipation of the high to form inside of here. But like I said, if we go back to this drawing up here, this is fractal. I can find it. This idea, damn, I gotta go on the daily time frame, huh? This idea right here is fractal. So this being the 6 a.m. candle, this being the 10 a.m. candle, what we saw is the 6 a.m. candle reversing, creating the high of the day. So we expect 10 a.m. to expand, right? What we see here is what we see on 6 a.m., except we see something like this, where 930 reverses. We see an opposing candle created at 930. And the open is more so like right here, essentially, of that 10 a.m. open. So we expect the 10 a.m. open to form basically from the open to this low, right? Ideally not a deep run, creating that small opposing run. So that's what we see, all time frames. And that's what we see over here, right? So it makes sense. We're trading high resistance to low resistance. That's our model, right? If we go over here, right? High resistance to low resistance. Another thing to mention, this is one of the best things for a weekly and daily profile is when you see a manipulation, right? When you have a swing high or low on the hourly time frame or something like that, especially for intraday profiles, when we manipulate with S&T and have all this right here, if there's no established high on the opposing side of manipulation, that makes for an even higher probability manipulation into distribution. And we'll go over some examples of that right now. So let's go over silver right here. So let's start on the daily chart here from like last week or 2 weeks ago or so. So on the opposing side of this manipulation, let's count the checklist, right? We have a low being traded into, right? Which is a reversal candidate, right? It hasn't been confirmed yet, but we have SMT, right? We have an opposing candle. So now we have everything, right? So now it's about profiling, right? Does a profile match with this manipulation? Like, where is Monday at? Say Monday is right here, right? So if Friday manipulated, like I said, you're going to have a invalidation. So if this opposing candle doesn't get respected, this idea of an open, low, high, close weekly profile is done for. This idea of manipulation uh, is done for, right? If this opposing candle basically gets closed over. But what we see is a really weak closure, right? So this candle is essentially just a retracement almost, like, right? Creating the low of the week. We don't expect this to get traded back to on a Monday, right? We don't need to revisit this because we already manipulated, right? We need to see expansion into what? Low resistance liquidity, right? We have a failure swing. So on the opposing side of manipulation, what do we have? A failure swing, right? Failure swings. That's adding to the context of this idea of manipulation, right? So once we expand into a high, what do we get? A new phase of price. What is the ideal, um, phase of price that we want to see for continuation through a high? It's going to be this, right? Phase of price always, right? Expansion into a high. You either want to see price leaving this high like this, right here, leaving the high with failure swings, or we just want to consolidate. So either retrace or some sort of consolidation, right? Because what that is right there is not a reversal signature, meaning we have to revisit this high, right? Because price isn't, it's not going to reverse from failure swings, right? So that would be a continuation signature. So now let's look here, right? This is the weekly open, right? The previous week expanded into this high. So now when you open up the week, do you feel comfortable trading away from this high? The answer is no, right? So we want to see an open high low close. And what do we have? What did Friday do here? It created S&P, which is what? It's manipulation, right? So this is when we expect the next day to expand, right? So manipulation, expansion, like manipulation, expansion. This is our this is our framework, right? So again, we expand into this high. What do we get? Consolidation, right? Which means we're not going to reverse from this swing point here, right? We have to expand against the swing point, and then we can reevaluate and see if price will give us that reversal signature, right? So I'm going to show you guys on gold what I traded in a minute. Let's go over even like something like up here, right? So this is how Fractal is. I'm going to delete all this stuff now. So we expand. So let's look here actually. You have a range. You can view prices through ranges, right? If we take out one side of a range and you see failure swings, right, and the willingness to trade away from this low, creating an invalidation level, this is a very good model, and it's a fractal approach, right? So I'm not going to check this SMT here. I don't really know. But we have the CSD, right? Right, that's check one. If this is going to be an expansion, what do we expect this to? We expect this to hold, right? Right, so we get a continuation signature, right? We're disrespecting opposing PD arrays, using them as support, right? Into what? This high, this objective up here, right? You can even see when we expand into these highs, what do we get? A pause on the market, right? We get a pause in the market. We resweep lows for what? Distribution. So it's literally like a pause in the market, right? We sweep lows this week, essentially manipulated. You can probably, this probably forms the monthly low. Yeah, it does, right? So monthly open low, right? Manipulating some internal stuff into this candle, right? To then expand into these failure swings. So now if we look at this here, right? Previous month expanded into this high. So we can look inside of this wick. We see a long wick, right? So what we're going to do is look inside this wick. Has a reversal already formed? That's what you're going to ask yourself. Right, clearly it has, right? You have a weekly swing point. You have SMT internally to that wick, right? And an expansion away, right? This would be your CSD, by the way. When it's a weak SMT, it's this fair swing, right? Because the other asset created a higher high, which would be the same opposing candles right here. Right, so you can expect a monthly open high, low close into what? Failure swings, right? Look at the opposing side of manipulation. This is our objective, right? And you can see the continuation signature, right? Expansion, consolidation, that's a continuation signature. When you look at a weekly profile, you're going to see an open high, low close here, right? Monday opens up small range. We take out Monday's high with a weak closure. So what is that already? An idea of a classic sell week, right? Does that make sense in a way? We expand large range. We retrace into this range, but what do? We don't manipulate this low, right? What do? We leave fair swings. We don't manipulate this low here, right? So what are we leaving? Failure swings on the opposing side of this range, right? So then we expand again, right? And we haven't actually taken out any major, you know, uh, objective. So until we actually reach a major objective, we expect price to be pretty heavy and show those continuation signatures into our draw. So let's go into gold. I'm going to show you the trades that I took this week using this logic. Let me just make sure I'm good. All right, I think I'm good. Yeah, I'm good. Okay. So let's go over here. So coming into the week, you're going to ask yourself, what did the previous week do? We're always asking yourself, what did the previous day do? What did the previous session do? It's an if-then approach to the market, right? So what we see here is Friday manipulated, right? This external range low and formed SMT. So again, expansion, consolidation on another asset. We put in a lower low, form SMT like this, right? So when we expand into this range high, we're going to ask ourselves, is the next day going to do this, right? Or is it going to continue through this high, right? That would be an invalidation to the idea of manipulation of this high right here. So what we see is Tuesday, we expand, right? Obviously over Monday's high. So that kind of throws off the idea of this being a manipulation. So what we're going to look for, right, is just objectives, right? Which is just external range liquidity, right? So we have the weekly profile aligned at this point, right? Because if you look at the weekly candle here at this point, it looks like this, right? It looks like a expansion candle, right? So we're aligning our classic buy week, right? Or at the time, it's a classic buy week, right? The Monday low of the week. You have the weekly candle supporting that. So now all we're going to do is we're looking for daily profiles inside every candle inside of this, right? Is going to be expansion candle into the draw. So now we want to trade. We want to trade away from a protected swing, right? So if we go to the daily time frame, we have a protected swing into an objective. Now on the daily time frame, intraday, we're looking for ideally a protected swing to form the daily wick to then catch the expansion, right? So let's look at profiles here. What do we have here? So we have Asia. We have the opening price, drifting open, and then what are we doing? We're tracing more so, right? So no established high today. There's no manipulation. We haven't reached a higher time from objective. So we are heavily focused on this high right here, right? Not even this high, the daily high, right? So when we see the 8 o'clock candle reach into this low, again, aggressive into the low, aggressive out, right? That's a manipulation. Combine that with what? An SMT, the small opposing run, supporting expansion away from this manipulation, right? So now we use the economic calendar. Right, we had CPI this day. If I pull it up, right? If we manipulate prior to a driver, what do we expect the driver to do, right? Expand, right? And it forms a CSD. So now we have everything aligned. If you look at the 4-hour candle, you guys know I use 4-hour candles a lot. I have a 4-hour expansion candle. So at this point, I have a weekly expansion candle. I have a daily expansion candle. I have a 4-hour expansion candle. So I'm aligning expansion candles away from what? Manipulation, right? We also have an hourly chain of state delivery. But yeah, I got involved inside of this wick here. So the previous candle manipulated, started the reversal, and has yet to reach an objective. I expect this candle to expand and create that small opposing run. Like I said, where is it likely to form? In this candle's range, right? So on the open of this candle, there's really nothing like I'm not going to use these little opposing candles. I'm just going to wait for this candle to form something, right? So we have this little run, right? So look at this fractally, right? If I want to trade a expansion candle on any time frame, I want to trade from a protected low, right? So this hourly candle forms a protected low on the 5-minute chart, right? We sweep out this low, and then we get a chain of state delivery, right? I don't know if there's SMT here, but that's not really required. But you get the idea, right? How this is fractal. So this is what I caught. Posted that in my channel. I targeted this high, right? So now let's reevaluate for the next day. So we look at the closure of the daily candles. What did the previous day do? Closed very strong. But what did we do? We expanded, right? Very large expansion into an objective. So what can we get? A new phase of price after an expansion into an objective, right? Just like over here, we reached an objective, these lows. What do we get? A new phase of price, which is reversal. In this case, we don't know. But the idea of trading back into the range is a possibility. So if you ever wanted to trade back into a range, what did we go over already? What do we want to see to trade back into a range? We want to see manipulation. We want to trade what at all times? What phase of price do we want to trade? Expansion. So what is required of that? Manipulation. So manipulation of the previous high, forming that small wick, right? We can form this small wick because we open up near the previous day's high, right? So when you get this chain of state delivery, I have everything aligned, right? So I want to trade back to this range. What's a good objective for that? Previous day's low, which is just a fair value gap. So that's our objective. So when we play this daily candle out, you see that, right? That small opposing run into this high. Let me check if there's any SMT here. There doesn't need to be at that reversal point. We get it later on. Yeah, we don't get it there. But what do we have here? SMT with the basically your reversal point, right? With this objective, go to the correlated asset. We failed to take that out. But let's go on the lower time frame here. We're gonna also use the economic calendar. So what do we see? Asia puts in this reversal, right? So if Asia manipulates, hold on, let me just draw this so it's cleaner. Right. Let's think about phases of price, right? So Asia manipulation into expansion. Next session retraces. So what is that? That's a continuation signature, right? Price is not going to reverse from these failure swings, right? It's also just really lethargic, right? So that's also a sign of retracement. So we also form SMT here. Right? So now we have a protected high. We have SMT as well. Then we're getting that chain of state delivery, right? So when I open New York session, it's a bit different than this, right? Because here I'm trading near the reversal point, right? For continuation, what you want to have if you're a New York trader, you do not want the previous two sessions to expand into the objective, right? That's an invalidation for New York. You don't even look at New York at that point. But what we see here is we open up 8 a.m. We have red folder, by the way, here. 1 hour open. We open up here, right? When I look to the left, what are we doing? We're disrespecting sell side PD arrays, right? We're respecting them for distribution, right? But now let's use the economic calendar here. Let's just leave this stuff. Let's clean this up a bit. Right, so like I said, if the reversal is already put in for the day, we're already distributing, right? We're already distributing. So like 9:30 or any time driver, what you want to see is either price make an opposing run to the draw being this line, this previous day's low. You want to see that opposing run of the draw and making a new protected high, and then an opposing candle essentially. Right, so we form SMT here, which is a protected high when we flex. We close over this opposing candle, and this is exactly what I took. Right, no drawdown right here. It's crazy. Right, so hourly open high with red folder, continuation to this previous day's low. Right, so there's that trade that I took. Does that make sense? And they're the same thing, right? I'm trading away from manipulation. I'm using the daily price delivery, right? I'm using the economic calendar, you know, to match my continuation or manipulation narrative, right? So let's go into like another example here. Let's go into YM here. So we have a expansion into what? An objective. What can we expect, right? Consolidation, right? So are we going to reverse from these highs when we take out all these lows? No, right? We can already anticipate price trading into these lows, right? Because of how we open up. That's another thing I want to mention. If you have like no bias or something, let's say like right here, let's say you're in a range or something, but the opening price is like right here or something, you can already anticipate, let's say you have favor swings on both sides, you can already anticipate price trading into this side of the range. Usually, if the daily profile supports that, obviously. And then you want to see the reaction to here, right? So again, we really view price through profiles, right? And then we can trade into this high, right? So that's what I'm going to be kind of showing right here. So I traded some of these days as well. But let's just go over like, again, how we trade back into a range, right? We expand, we consolidate, we manipulate. That's what's required to get expansion back into a range. What we also need, CSD, opposing candle. If you look at, if you're going to use a daily chart, face the price, you can use the monthly candle, right? We're matching that manipulation of daily time frame with what? A monthly small opposing run, which supports a monthly expansion candle, right? Previous month, large range. You can trade back to that range, right? You're also using weekly profiles, right? Small opposing run on the weekly time frames, supporting continuation away from that manipulation. So now let's go into some intraday stuff. All right, so I traded this day here. I was looking to trade both of these days. I don't know if you guys remember this day. Anyways, I traded this day here. Because why? Because we are opening up near these lows, right? Because I don't feel comfortable trading away from these lows. And look how far we are from these highs, right? So when we manipulate, right, and I look to the opposing side of the daily range, I see failure swings. So I can trade from here to here, right? To these lows, right? And once the objective is hit for the day, right, I don't look to trade continuations, right? There's no point. There's nothing else to target, right? And all, yeah, there's just nothing else to target, right? So that's kind of what I do. You guys ever seen my trades? Like I'll trade from here, right? I'll target over here, but the majority is coming off here, right? And here. For example, like I was trading this right here, majority is coming off here. That's kind of how I view price in like hourly models. But anyways, I was looking for a continuation, which it did end up going there. Right, but if you're gonna get clean distribution, you have everything set here. You have a manipulation at the low of the day. You have the previous day manipulating. You have a CSD, right? So with 10 a.m. open here, this is really my model to a T. Like I have 6 a.m. reversing. I want to see a 10 a.m. open, low, high, close. This is the invalidation. So we get a really deep run. Like if you have, let's say 9:30 reversal here, and you have a really deep run at like 10 a.m., this is not how reversals form, right? They have these shallow runs, and then we expand with speed. So when you see this, it's a total invalidation. Look at the difference here, right? We expanded to this high. If I use like 9:30 here or something, look at the difference, right? 9:30 expands to the high, we rip lower, like we rip lower. Look over here, right? This is really invalidation. Once we start trading underneath this low, like it should be in respect to this range really. So I didn't really trade that day, but I wanted that, right? I would look for longs here every single time, because I would know that the majority of the time that would work out, right? So now let's move on to some of the trades that I took. So again, I took this trade and validated here on that day. Let's look at the weekly profile here, right? So we have the opening price being over here. What we do first is we drift lower, right? Trading a Tuesday low of the week, this could possibly be the low of the week, right? But where's the invalidation? Is we can't displace, right? We're not getting any like expansion, right? Away from here, right? We actually create SMT right here. We trade into a reversal point, which is a daily high, and we can't expand through it, right? So what would this be? A manipulation, right? And I think I traded this day as well, right? The reason why you can trade this day here is because when you look at this manipulation, what has the daily range failed to do thus far? We haven't really expanded yet, right? We haven't really expanded. We have objectives open. We have these failure swings. So again, 10 a.m., I could expect an open high-low close, right? Align the expansion candles here. We have the daily candle, small opposing run. We have SMT manipulation, right? We have 4-hour small opposing run. We have weekly small opposing run. We have objectives, right? So you can trade this. The daily profile supports this, right? It's just expansion, consolidation, manipulation of a high with SMT, and now we're getting the real move of the day. Right? This can confuse a lot of people. It's not really exactly clean. This is something that I find be really like clean in my opinion. Just going off of how just being price in candlesticks, right? I'm not going to trade this candle here. Why? Because the opening price is too far, right? But that's like another thing. I go over that a lot, but at this point, we play the price out. The daily close, what do we see? What did the previous day do? It manipulated. It also confirmed a chain of state delivery. So now we're looking at the opposing side, right? We're looking at this low now. What do we have below that? Right? We have this volume balance, this low right here, fair value gaps and whatnot. So we want to trade that, right? We want to confirm daily profiles inside of here, right? We want to have small wicks supporting those daily profiles. That's what we have. We drop to the hourly time frame. I might have traded both of these days. I'm not sure. But look here. Both New York reversals, right? We look at the opposing side of here. What do we have, right? Especially this day, but we're going to go over this day first. I traded this day. This was like a news event, I think. Maybe not. Shit. Maybe not. But we had S&T here. Fuck. I could have swore this is news. Yeah, this is 8:30 news. I don't know why it's not showing. Oh, okay. That's why. That's fine. This is a Friday. Here. Here's the news. We had non-farm payroll, right? So what we see. Let me remove this. Oh my god. Here we go. Here's you have SMT with the correlated assets, and we have yet to reach into our drawn liquidity here. And this is another thing that people get confused on, is yes, we reached into this low, right? But what did it do? It did do its job, right? It expanded away from this low, and the other assets took out this high, right? So now that did its job. So now we get a new phase of price, which would be what, right? Expansion, now with expansion, ideally, right? So we see 8:30 manipulating the daily range. We have that small opposing run. So now I'm looking for SMTs internally to here. I'm looking for a 10 a.m. open high low close. So 6 a.m. manipulated, much like this day. Then I want to see an open high low close into these lows. That's what I traded there. Now if we play out the next day, we see the same thing. We see some sort of retracement, right? You really have a range, right? Consolidation. So expansion, consolidation. You're manipulating highs around relevant times. I pull up probably like 8:30 or 9:30. 9:30.
Is there something else I can help with?
I don't know why that's popping up. You have 9:30 manipulation. Look at the opposing side of that manipulation. What do we have? Failure swings. Right, so this is high probable intraday reversals for daily continuation away from that daily manipulation. Right, does that make sense? In a sense? And I'm aligning expansion candles again, right? I have the weekly expansion candle. I have the 4-hour expansion candle. So again, I'm waiting for the 10 a.m. open because this candle is not an expansion candle. This candle just manipulated the daily range, formed the daily reversal. I'm trading the expansion candles following that, right? At all times. So yeah, that's that example there. Let's see what else I have here. Like a Euro daily chart example, more of a higher time frame thing. All right, so again, if you want to frame higher time frame expansions, like monthly expansions, what do you need? You need some sort of manipulation and a draw. So this candle here, this candle is actually the one that manipulates, right? So we want to frame this candle expansion lower towards the draw, right? What's on the other side of this manipulation? It is failure swings. But what we need to see, right? This is the 3-month chart, right? See how fractal is? So this candle manipulates. Why is it not going to reverse in this candle? It's because this candle is not an expansion candle, right? It's going to wait for this opening price to then expand, right? Much like over here, right? Why can we expand away from these lows? It's because we have this small opposing run supporting expansion, right? There's 2 ways price can really form a reversal candle. This is a reversal candle, right? Where we hit the reversal, the previous candle's low, and a reversal point in the same candle, but we also expand in the same candle. And that's because we have that small opposite run supporting expansion away from the reversal point, right? So this is a totally different scenario where this candle, the open is very far away. So we're not going to reverse in this candle necessarily. We would do it in the next candle. So when we look on the monthly chart, what do we see? Right, this candle more so just continues, right? I'll go on the weekly chart. What do we need to trade away from manipulation? We want to see some sort of established higher low, right? So again, this monthly candle hit this key level, but in reverse, we actually took at the previous month's high, which is what you see here. Took at the previous month's high, using that as a reversal point, right? So expansion, more so consolidation, manipulation, new week or new month open right here, new 3-month open as well. And then we get the manipulation. And this is where we're looking for monthly open high low closes, right? Because we're internally to a 3-month open, right? If you use quarterly shifts, that's essentially what the 3-month time frame is for. Or just IPTA lookbacks, that's really using, right? We have these small opposing runs. You're obviously going to have weekly candles inside of that, right? And also phase of price. So when we take out lows, expansion into lows, we can get a pause in the market, right? But what do we see on the opposing side of this retracement, right? Failure swings, right? So just a consolidation, so expansion consolidation. You manipulate that high. And again, we're opening near this reversal point, right? Candles, highs, and lows are reversal points. We're opening near it. We're having the small opposing run, which supports expansion, right? Into these failure swings on the higher time frame. So that's pretty much it. If I drop it down to a daily time frame, you're going to see pretty much the same thing. Right? We have expansion, but why can we already anticipate this being an expansion, right? The next week is because the previous week left failure swings, right? So what is this? A continuation signature, right? We expect the market to expand, right? Because it's expansion retracement, which is a continuous signature. We expect expansion, right? Expansion occurs after every phase of price. We expand into this low, very large range. What can we expect? We can expect a possible new phase of price. We get an inside bar, which is a form of consolidation. We expand again. Expand, we get consolidation again, right? The ideal way to trade away from a consolidation is always going to be manipulation, right? Manipulation is the phase that we're looking for, or the signature that we're looking for to actually anticipate expansion, right? Because you can't anticipate, and price doesn't have to revert. It doesn't have to like manipulate necessarily. It can expand, consolidate, and expand again. It doesn't have to manipulate, but we prefer manipulation because that's when we can actually expect it, right? If it just consolidates, we don't know when it's going to expand. We don't know. So we have to refer to a manipulation, right? And look here. So you have Monday consolidation, Tuesday consolidation. Look how Wednesday opens up near the reversal point. If this is going to be a manipulation of this high, then this is the only area for it to form. It's going to be a classic sell week. If you're framing a sell, this is the only the only area for price to reverse from, right? So when you open up near that, hit that small opposing run, you can frame a trade this day. You can frame this candle 2 reversal into expansion. Why? Because of that small opposing run. Once that's formed, we expect Thursday, Friday continuation, right? What else, man? Let's go over NQ. I'll just go over like NQ ES as well. And then I'll go over questions. Right, so let's go over like the weekly profile and some stuff that we saw this week. So going into Monday, why can we frame bearishness, right? Expansion. We're looking at phases of price on all time frames. Expansion, consolidation, right? How do we react to this consolidation high? We expand into it, expand away from it, which is a reversal signature. Why can we trade New York here at this point? Again, this would be a classic sell day. We have SMT with the previous high. So we have everything aligned, right? We have the small opposing run on the daily candle. Aligned with the profile, we have a manipulation with SMT, right? So if London reverses, then we want to see New York continue lower into what? Failure swings. So look on the opposing side of manipulation. We have failure swings, right? And we also have this continuation signature where we expand, right? We consolidate. You manipulate into this high, which is just a fair value gap with an SMT here, right? And then we also form like some SMT here. I want to say, I'm not sure, but when we open up the 4-hour candle, the 10 a.m. candle, again, this is the only area where price should continue off of, right? We don't need to come way up here, right? We want to see shallow retracements. So we can already expect a 10 a.m. expansion, right? That small opposing run to expansion, right? I know some people caught that as well. So let's go to the next day. Yeah. So I streamed this day, I think. Yeah, I streamed this day here. Now there was an SMT here with ES. So a lot of people got thrown off by this. But if you guys know I was bearish this day, it's because maybe a little bit more experience, but this classifies as a valid long into like this high, for example, right? But once we hit this, we're forming an SMT here. Now look here. Look at all these lows. The market's not generally going to reverse from this just because we have an intraday CSD, right? This CSD, sorry, not CSD. This SMT did its job, right? Expanded. What do we want to see it? If we're going to, if it's going to fail, right? We see expansion, right? Expansion mouth expansion. But just a general rule with SMTs. If you see an SMT like this, it's generally not as like as high probable, right? Because this is just a failure swing. Right? This is just a failure swing to this low, right? So I want to see more, something like this. I want to see an SMT with an established low, right? So like this, right? I don't want to see any lows in close proximity to this low. You know what I'm saying? So that's one thing, but also if we look here internally, this is another tip with SMT, right? At one point we had New York showing strength, or sorry, not New York. We had NQ showing strength, but when we see that strength kind of flip, that is one of the best things you want to see, right? You want to see that strength flip, right? So we have strength here bullishly, Now we have weakness. So it's like it's almost like catching up. I call it like catch up S&T. That's what I call it because we kind of switch strength for NQ to catch up to these lows, right? Because ES already took all these lows, but now we have this S&T followed by another S&T, but now we have bearish S&T here. So that's like a little tip that I use. I don't know if that's like a real thing, but I keep seeing it. So like, I think it's a good thing to know. But yeah, basically, if this is going to be a bearish day on NQ, this is the only area for it to form, right? That's what we have essentially. Consolidation, manipulation, followed by another S&T. So if we get those weak signatures for where we can't really continue through this high, then that's a good sign to revert back to these lows. So yeah, I string that day. It's another day. Let's look at the daily chart here. The closes. So you have Tuesday running at a low. So if this candle manipulated, what do you want the next day to do? Expand. You go to the intraday profile. I'm not sure if we had S&T. So I didn't really anticipate this, to be fair. I don't think we had S&T like YM. Like if you want to count that, that's cool. But this is not something I can trade, right? When I come to the charts after, I'm going to trade after the news event. So 9:30 just kind of runs without me, right? Which would validate this S&T. So again, using the economic calendar, as you see, we clearly run out the previous low on YM, but on NQ and ES, we failed to do so. So I know a lot of people were saying like classic buy day. Yeah, you're not wrong, essentially. Right, we have this S&T, but once the news event actually expands away from the S&T, this is how you know it's a valid, manipulation, right? Because if we're going to be bearish, this is when the drivers would essentially reverse price because there is no reversal prior to that, So you want to see that, right? We also have, a short-term low ran out. You have this here. So I think some people got that. If you look at the opposing side, you have external range targets and stuff. But yeah, there's really no opportunity for me to stay, to be honest. 9:30 didn't really provide an opposing run that was significant, which is what you like. You want to see this if you're long in the trade already. But in order to get in the position, like you ideally want to see some sort of opposing run and then close through that, which would have to be like some like 1 minute stuff, which I'm not gonna long that high, to be fair. This day here, like I said, we actually formed SMT here. So potential manipulation, right? And look here, look what I'm talking about with this catching up shit. Sorry, I'm in class, but this is really interesting. I find it really interesting. So you see how ES was the weaker asset, right? But this is something you really do on the higher time frame, intraday time frame. What we see the next day is that strength switch, right? We have the weaker asset here. So it was strong, now it's weak. You see that? So it kind of supports the idea of this being a manipulation, right? Does that kind of make sense? But yeah, let's look at the daily closure here. Really hard stuff to navigate if I'm being honest. But this is when we just revert to intraday profile. That's what made it obvious. You see the strength, like it's very different, right? Very not correlated, which can be actually really hard to frame. But when you see this here, even on NQ, bro, there's no established low of the day, right? It's just failure swings, especially on ES, right? So when we manipulates, the 6 a.m. candle manipulates. I use 6 a.m., 10 a.m. candle basically just with manipulation. Like I see that the 6 a.m. candle manipulated, it's not going to reverse likely because of how far it deviated from the open. So I just want to see that small opposing run trade away from the 6 a.m. high, basically, right? So that's what you see, right? And it forms SMT with 9:30. So yeah, that's essentially how I trade. It's just manipulation, catching expansion, using manipulation within profiles, right? Within candles. So that's really it there. So let's go ahead and answer some questions. Oh boy, oh boy. Okay, this was during. Is this even my stream, bro? Oh yeah, 9:30. I saw it 9:30. That was an hour already of just yapping. Oh shit. Okay. Okay, we started here. Cool. So yeah, you can go ahead and send us comments. How to identify high probability draw. So this is for intraday draw, and just uh like what's it called? Weekly profile draw. It's gonna be like early week, low resistance. So let's say the weekly opens here. Let's say it does something like this. It leaves the opening price, but we leave failure swings early on in the week. So if we manipulate here with the SMT or something, then we expect price to revert back to the weekly highs and ideally trade through them. This could be substituted with the daily profile a lot. Like almost every New York reversal is usually session highs. So again, early on in the day, we don't form an established high of the day. So when we manipulate, we revert back to that. So it's just like the weekly candle early on in the week, we don't form an established high. So I don't feel comfortable trading away from that. I'm trying to actually trade to it. In order to trade to it, I need a manipulation to then expand to it. Does that make sense? So I just showed a bunch of examples of that, but we'll go over like some more, like on ES, we'll go over the weaker asset here. Like on Friday, for example, we manipulate, right? What's on the opposing side of manipulation? Failure swings. It's also session lows. We don't see Asia session creating an established low, right? So this is when we actually revert to that, revert back to it. We expand to it because it's low resistance. So it's high resistance to low resistance. That's essentially what my whole model is built off of, right? That's the reversal. Yeah. So I like to trade the reversal essentially. Like I like to basically trade the next candle. So I view manipulation in candlesticks almost in a way. So where like I see that 6 a.m. formed the SMT. So 6 a.m. manipulated. I want to trade the expansion, the next phase, right? So following a reversal is expansion. So I want to trade that next open high low close. If you want to look at my NG trade, let's actually go over that HG. So I was bearish this whole freaking week, is because we open up the week and we're leaving failure swings. So I want to revert back to this. So that's a good example, right? So here we have this manipulation. So if I show you like the 4-hour chart, we're manipulating this high. So this is a potential candidate for manipulation to form the high of the week. But what do we see, right? We fail to really follow through with that manipulation. We get a decent move, right? But if we're going to continue, what would we do? We basically continue off these opposing candles. And once you see this expansion, now with expansion, consolidation, expansion, right, through these highs, then we have to revert to this as being a high, right? Because even if we do something like this, like to me, this is failure swings. Like this is not what a true reversal looks like. It's looking something like this essentially, where like you have aggressive in, aggressive out, you know. And then once I go into the next day, do I have anything to revert to, like here, for example? Do I have anything that I can trade away from that the previous, basically inside the previous day's range? And the answer is like no, to be honest. You could say this fair value gap. So I'm really just going off of a profile. So what do I see? Right? Expansion into an objective, internal objective to the weekly range. What we see is a failure to reverse off of these lows, right? We see consolidation. which is what a continuation signature. So this provides narrative for basically continuation back to the weekly open, right? Because there's no established low there. So when we manipulate the consolidation high, this is ideal. This is like A+, bro. Like, because you have the small opposing run, right? On the daily candle, you have just IPTA, like the face of price, right? Expansion consolidation. We know we can expand. So when we manipulate, this is the ideal area to get in because there's no established low today. Again, looking on the opposing side of manipulation. When you look at the opposing side of this manipulation, what do we see? No established low. We see equal lows. So even if you wanted to trade this day, good day to trade, right? But the opposing run is quite large. You see that? The opposing run is quite large, so you're gonna have to be careful with that. But with this, we can expect a pretty nice move, right? Small opposing run. So I got in on 30-minute time frame. I posted this on my channel. I just got in here. I don't need to see anything else. Right? No reason to see anything else. If I look at the 4-hour time frame, we also have the open, high, low, close. So again, I'm always trading within candles. So I'm always trading within the weekly, the daily, 4-hour. That's kind of how I view it, and even hourly time frame. But yeah, I'm trading towards Monday's low ideally, but we never got there. So I kind of closed out the trade, basically right here, essentially around here. But my overall target was this here, but we ran out of juice. But yeah, very clean profile, bro. Like really like textbook, bro. Like this doesn't get any cleaner than this, man. If we go to oil as well, show you guys that trade idea. So classic buy week, we're trading off of a low. The weekly opens up right here. So again, previous week trading to low. If it's going to be a manipulation, we're going to expand away from it. So what do we have? An open, high, low, close weekly candle, right? So the reason why I can trade this day, we trading to a high, right? The previous day. This is why we actually come back into the range, right? The previous day hit this high, the next day will provide that phase of price, right? Usually the next day is going to provide the next phase of price. So you see this high right here. You don't actually get the next phase of price until the next day, right? That's why my model is the way it is. You see over here. That's why I look for reversal in like 2 candles. So if this candle hits the low, I can trade this candle, right? Because it has that small opposing run, and it's just the second candle, right? So a lot of people wait for the next day model for this candle to close. But if the candle has a small opposing run, then I can trade it because it's going to be an expansion or a reversal into expansion. I want to trade expansion. If it's something like this, like for this example, let's say, if the candle goes something like this, say I want to frame a reversal off this low. If the candle goes open high first and then low, that's an invalidation. That's one invalidation. If it went open low first, then I would trade that, right? I would try to catch the expansion. Let's actually see what it did. So yeah, you see how it goes open high first? I'm actually going to target this low because again, there's no established low today. Does that make sense? I'm going to view it with candlesticks or what do you call it? 4-hour candlesticks, right? I have this 6 a.m. candle reversal. I can trade these 10 a.m. open high, low close, and I'm going to revert to some manipulation inside of here with SMT. Right? We have a manipulation here. Ideally, I look for a manipulation in the hourly time frame, but we don't really have that here. We're pretty much just retracing. So expansion into a range, or retracing back into a range, I mean, right? Which is presented through sessions, which is always ideal. And then we get the New York reversal, right? I remember this actually. We actually have SMT here. I think I got stopped out break even on this day. I'm almost positive. If AB is in this stream, I think we traded the shit. I think we traded that shit. Yeah, that's an invalidation. So I would look for the next day to form it, right? Because now we have a Monday right? Possible reversal into this low, right? We're manipulating, right? What do we have? All these failure swings. So if it's going to be a true manipulation, the next day is going to expand. It's going to do an open, low, high close. This did an open, high, low close. Anyways, that's kind of off topic about how candles form. But let's go into this day, right? So the reason why I can trade this day pretty much is because we actually failed to reverse off of this high. So I'm going to revert to this high. Why did we fail to reverse from this high, right? So it's possible to trade this back to the range, right? Because why? We have this manipulation here. But what is this expansion met with? Expansion met with expansion, which is not a continuation signature away from this high, right? So I know a lot of people are going to be trading this day here as a candle 2 closure, which is not valid, right? Because of the intraday phase that presented, right? Expansion with expansion, consolidation, manipulation with SMT, expansion, retracement, expansion. So when I come to New York, I have a protected low and a draw on liquidity, which is that daily high. I'm going to look for the open high-low close for the 10 a.m. candle to trade. So what I see basically is this. I have a protected low where I feel that the 10 a.m. open should form its low from the opening price of 10 a.m. open to this low. Basically this opposing candle, which is my entry. I actually entered before this open. I entered right here, right? And my first TP is here, stop loss at the body, and I'm looking to target here, but we never got there. So does that make sense? I'm trading away from an intraday protected low. I'm looking back at what the previous day did. It reversed, right? It's expansion with expansion. That's a reversal profile. And then once you see the consolidation, that's even better, right? That's a continuation signature. And then the manipulation and expansion away from that, it's just like textbook, bro. It's so clean. But yeah, this is also with the expansion weekly candle. And the reason also why I can trade this expansion candle is because if you think about phase of price, right, we have pretty much 3 days of expansion, right? So if you were thinking about a TGIF here, it's not valid because Thursday we had the pause. Let's say that Thursday expanded into this high, then we can look for a TGIF because then we would have just consecutive expansion candles, and then we could expect the weekly range to be capped to trade back into the range. But Thursday actually did that, so it already had the pause, so not like restarts. You know what I'm saying? Does that make sense? Fees, what's up, dude? Do you trade inverse fair value gaps? Yeah, I mean, kinda. So in reversal, like areas or whatever, you're gonna see this a lot. Again, expansion, mouth expansion is the reversal signature. So inside of this expansion into the low, you're going to have fair value gaps. So you want to see expansion through that, right? And then you see price supported by those inverse fair value gaps. So I actually do use inverse fair value gaps on like this sell side of the curve. So like this, right? If I have a manipulation here and I draw out just the sell side of the curve PD arrays, I don't even use mitigation blocks to be fair. I use fair value gaps. So yeah, I'll show you some examples of that actually on gold. Maybe even here. Hold on. Yeah, like look here. Right, expansion into the opposing candle, immediate expansion away, right? The 10 a.m. open, I want to see supported by this inverse fair value gap. So stuff like that, but not so much for entry necessarily. I use opposing candles mostly, but yeah, I just use this as confluence. So if I go here, this is a big part of my confluence. Really seen on the 15-minute chart, right? I have a manipulation, and we start to disrespect PD arrays that were respected before. So this here, this fair value gap was respected, right? Because it delivered to the high, right? it retrace into it, deliver to it. So therefore, it's like a strong fair value gap in my opinion. So when we really close through it, I find these to be like the best support levels. Is old fair value gaps that were respected, but I'll use the ones that were not mitigated too. It doesn't really matter. Like you see, this one was respected. Drag that out in time. Now you have PDRA alignment essentially. You have this opposing candle and this fair value gap here. We can use all the fair value gap, like this little one. Like I'm not just gonna use this one. I might as well just use all of it. Drag it out as just a general area. So like that. You can see this the previous day as well. This fair value gap broke structure, right? Dragged out in time. I want to see price basically used as redistribution or reaccumulation, whatever you want to call it. That's kind of how I use it. But I also use it as at the reversal point, just to identify the reversal signature. So if you look on a lower time frame, what do you see? Expansion, now with expansion, and it's like a V shape almost, right? And the displacement is signified and identified through fair value gaps. See that? And again, you just drag this out. You have opposing candle aligned with a inverse fair value gap, why not? But yeah, that's essentially how I use it. But fair value gaps was torture. Yeah, it's reported. What time frame? Or what time frames do you discuss the weekly, daily, and 4-hour candles with? What do you mean? Like those candles are my framework. I'm not sure what you mean by that. I use like the intraday time frames, like hourly and weekly, to basically confirm my daily lows and weekly highs and stuff like that. To basically trade the higher time frame expansion candle. You know. Small top down from yesterday. Yes. Yep. That's good. Really perfect. That's my exact view on that. Personally. Are all your trades always framed on 4 hour? Yeah. So like for intraday, like lower time frame stuff, I'm always usually trading within a 4-hour expansion candle. And the daily profile is supported by the daily candle. So I'm aligning expansion candles away from some sort of manipulation. Gold was so clean. Yeah, exactly. Yeah, I traded 2 days gold. So what's your checklist for confirmation of manipulation in your expansion? So it's not so much a lower time frame. It's like I already went over, I think, somewhere over here. It's always gonna look something like this. All right, so if I want to trade a daily expansion candle, ideally want to trade from some sort of manipulation. It can even be like this. It doesn't have to be a sweep. This is manipulation, by the way, guys. Like a failure to displace with a correlated asset or not sweep or not displace sweep like this, right? Showing strength. That's also manipulation, right? So something like this, ideally on the hourly time frame, okay. And then I want to trade the 4-hour candle, like let's say here. Let's say the candle opens up here or something. I want to trade after this opens, right? So previous 4-hour candle manipulation, next candle expands, like right. And I'm also aligning this with an expansion candle. So it doesn't matter if this is a weekly time frame, daily. It doesn't matter. It's the same thing. Does that make sense? So on a lower time frame, I just demand like if this hourly time frame, like 15-minute, 5-minute CSD, like whatever you want. You know, if it's an inversion for you, that's cool. And the profile, if this is aligned with a profile, dude, it's so good. Like it's actually insane. If I like show you some examples, like we can find some, bro. Like literally, it's this day too, but I'm trying to find a New York reversal. Okay, so here was one. I traded this as well. Oh, someone sent me something. I just want to make sure I'm good. Okay, that was just a friend request or something. Let's go to the daily time frame here. Let's start all like from the freaking beginning, bro. Let's go over this whole thing, basically. So expansion, right? Why can we anticipate this expansion? Look at the failure swings in the lower time frame, right? There's just consecutive highs. We don't see something like this. You can even see on the higher time frame, like when you see this, like especially if they're like in close proximity failure swings, like try to find an example. I could probably see it better on the daily chart. Like this here is all low resistance. You see how the low of each candle is just near each other? That's all low resistance. So when we manipulate, this is what we want to target, right? All these lows. But anyways, see, it's the same thing. Like if I want to trade to objective, which is low resistance liquidity, what do I need? I need simply manipulation. Like literally that's it. Like, it's actually really simple. But here, I think we have some sort of, we take out this low, essentially. I think we barely do, or it's over here on this one. It's on either one of these feeds or something. We take out that low. Then we expand into an objective, right? So again, new phase of price. My gosh. What the hell is going on, dude? I can't. It's weird. Okay, new phase of price. If we want to trade back to this large range, what do we want to trade? An expansion weekly candle. You have this small opposing run supporting that. So you see how the new phase of price is often going to occur within one or two candles. So this being one candle, right? This being one candle as well, where the previous week hits a key level, right? So this here, this previous week hits a key level, which is this high. This week here hits a key level, which is the opposing candles, or just EQ of this range. You see how the next candle expands and actually provides the phase of price of expansion away from those key levels. So that's kind of my general idea. And once we have this reversal already put in, so this candle reverses from EQ of this range. So I want to frame an open, high, low, close for continuation. It's as simple as that. So when I look in here, I have to go on NQ though, just because it's easier to see the manipulation. So the weekly opens here. You manipulate this low and create S&T. So again, what is on the opposing side of this manipulation? Failure swings, right, for the week. So we want to trade back to the weekly highs, right? We also have this high up here. So if I want to trade this candle, an open, low, high, close, what I want to have ideally is a manipulation. What we have here? Combine that with S&T, right? Now you have a model supporting that higher time frame model, right? So a higher time frame area to displace away from. Now I have a daily area to displace away from. And I'm always using highs and lows, usually. That's my favorite PD area. It's the best PD area of all time. I mean, there's no better PD area, in my opinion. So we have here, we have the SMT here, and we have 930 as well, a driver. And you have the, I traded this day as well. You have the, call it CSD, right? So that kind of makes sense. How we're framing a top-down approach to that. Yeah. That's kind of the checklist there. Yeah, profiles help with bias. So like, let's say you have no narrative. Let's say like exactly like no narrative whatsoever. You just let the profile develop. So let's say you have no narrative here. Well, now I have narrative when we actually manipulate something. I can look at the opposing side of that manipulation. I see low resistance liquidity. Like, look at these daily equal highs. Look at that. So when I see that, I have daily bias. I have a one-sided bias where I can frame bullishness to these highs, right? That makes sense. So also I want to go over something real quick. Just the phase of price here. Expansion into this low. new phase of price consolidation inside bar. Then we create SMT on Monday. So now if we expand away from this, that's a valid reversal, right? Because we must expand away from a SMT, which is a manipulation, right? So once we do that, what do we have on our side now? A weekly profile where we have the weekly candle being an expansion candle. You see that? That small opposing run supporting expansion. The SMTs, manipulation, right? All that, right? So each of these days, what do we get? Small opposing runs, which is creating the weekly candle. If you look over here, I remember this, right, this as well. We expanded to this high. What do we get? I traded both these days, back-to-back days. This is really good lesson right here. So we expand into this high. Really, there's so much. I traded this day too, bro. Like this PA in general, it looks ass, but it's actually so clean. So look, we can start here. So Monday, again, like I said, we're opening near the highs. So ideally, we want to see reversal off the highs. We're going to see price trade towards the highs, and then we could trade towards the lows, right? Because if we want to trade towards low resistance liquidity, because we're pretty much trapped at this point. Like, look, we're really trapped, right? Like between highs and lows. So this is when you want to see the weekly range develop. We see Tuesday trades as high, fails to actually, displace through it. So when you look at the opposing side of that, you see all these lows. So you can trade expansion this day. And the profile supports this day as well. It's a classic buy day, right? So now even intraday, we have a protected high. So in New York, we see that London didn't even provide a significant expansion. You see that? So this is when New York is the best to trade. Is when London provides a reversal, but it actually doesn't reverse. It doesn't actually expand, right? New York can expand. That's what we want to trade. So there's that. And we look at the close of this daily candle, right? We don't close below it. So if you look inside this wick, I traded this day too, but I think I traded back to the open just because the way the weekly profile. Yeah, I did. Not the weekly open, the daily open. So again, reversals here, expansion. Now with expansion, that's a reversal signature in its own. Again, refer to sell side PD arrays getting closed over. Now they're supporting price, right? But here, I'm fading that logic. And look at this fractal, guys. Like, it's crazy. So look, when I look here, no established low today at the time. So I'm using an hourly swing point to basically refer back to these lows. You see that? So that's what I'm trading there. So it's all the same thing, but fractally. And look at this manipulation. We form a swing point, right? From this swing point. Look at the opposing side of this manipulation. We have failure swings. All these failure swings. So ideally, you want to trade to that, right? If this is going to be manipulation, we get the close, right? We get the close that we want to see. We have a new week, by the way, opening. So what we want to see is an open high, low close to trade away from that. But what we get is more so a consolidation. So what's the phase that we get? It's not expansion met with expansion like we get over here and over here. It's consolidation. So we can't reverse from a consolidation. So we have to revert to the high again. And ideally, when you want to trade a consolidation, you want to trade the manipulation of the consolidation to then catch the expansion to the highs, right? So look here. This is so clean. Open low into this fair value gap, high close into the failure swings, revert to the 4-hour time frame. You have a protected low, right? 6 a.m. reversal, which is 9:30, by the way. If you look, 9:30 again makes this opposing run and gets closed over. So 10 a.m. candle, I expect an open low high close within this range. That makes sense. So expansion, consolidation, manipulation, distribution, and then we form SMT again. So if you think about the weekly profile, we have the open here. We have a potential high of the week candidate because we have SMT here. So in order for this to be a manipulation, the next day will expand, right? That's what we see. Right? This is example of where there's really no manipulation here. You get a manipulation in New York session where ES takes out this high. If I show you. So at a point, I'm still trading away from manipulation inside of this candle, right? I'm always trading away from manipulation. That's really it. You know? And like I said, at this point, you make this manipulation at a relevant time, a pretty relevant time, right? To where this candle does not support bullishness. Why? Because not only the weakness, right, the SMT, right? So this is that thing again, bro, that I'm talking to y'all about with this bearish, the SMT switching, bro. It's so interesting to me. Where we have the previous day, it's actually a bearish SMT, but then it switches to bullish, right? We're actually showing strength here. So it's like NQ is catching up now to this bearishness. And yeah, when you see this, the failure to displace, right, over this high with the SMT, then it's basically filling in that wick. Because at one point, this was a wick, right? Right? But now this model, this SMT is actually supported by the daily candle because it's actually more likely to go bearish than it is bullish. Does that make sense? Yeah. I just like all those drawings, so I can go back to that. Sherlock. What's up? Okay. With what SMT, or did you check it before? I guess SMT is silver. Yeah, I use SMT on gold with silver and your XAU euro. These are very correlated to gold. I don't know what that is. Would you look for S&P gold? Alrighty, okay, I just said that. Okay. Alright, I'm only gonna be looking at stuff that is tagged if you tag me, so just tag me so I can like just get through this quick. Yes, dodgy 24, yep. But we didn't sweep the previous candle's high. Like when that happens, what your confirmation manipulation. So I don't actually require, so much like T-trades, I actually don't require that to happen. You're gonna see it a lot. So I view the previous candle just hitting that high, form the SMT as the manipulation. Now that is the ideal scenario, right? Where we actually take out the previous candle's high. But what would I need, basically? Let's just use this as an example, like both of these here. See how price doesn't even take out the previous candle's high or low? What do I need to see? Basically, I know for a fact, ideally, or most likely, I mean, that this candle that manipulated, right, these two candles, they definitely did form a reversal. They probably did not form a reversal. So I would need for this candle that I'm trading the expansion away to have that small opposing run, supporting expansion, right? But I also need to confirm a reversal, right? I need to see like opposing PDRs fail. I need to see a CSD. And sometimes there's SMT with the candles low like that. So yeah, you just have to have that candle reverse essentially, because it's not like a candle 2 closure where like we reverse in that first candle. That's the objective. It's tough, you guys. Keep missing Monday. Bright trade Monday. What are you talking about? I don't even know what this is, bro. D1 hindsight, D1 demo. Yeah, I told y'all that shit was not holding, bro. Where can we learn this SMT concept in space? Yeah. Oh yeah, T-trades. Yep. Nice. Yeah, like that's just so far in the range. That's what you want to see, right? You want to see SMT, or you want to see 930 like not reverse and continue. I think a Fees traded that, by the way. It's a good trade, but not so much my thing. The thing he did, I think, was like more of a loose stop. He was still anticipating a retracement. He was accounting for that, which is cool. But it just didn't happen, which it doesn't have to happen, you know. So within the 4-hour 10 a.m. candle, you want to see the first or second candle manipulate with a small or large opposing run, creating that open a high and low close area. The other two candles expand. This is almost same like fractals. Yeah, it's like this pretty much. So like step one is trading into a high or a low, right? So if we trade into this high or low, and the opening price of this 4-hour candle is way up here, I'm going to wait for the next open of this candle. Why? Because this candle that I'm trading within cannot be an expansion candle. The open is too far away. So I'm going to wait for price to open for the next open, or next candle. And if we reverse inside of this candle, and the next open is like right here, then I expect this candle to just expand. Why? Because we hit the reversal point. We've already confirmed it on lower time frames. We're gonna have a CSD right here. So my invalidation for this idea is just simply like this opposing candle, right? I don't even want to see price come back down here because it shouldn't. It shouldn't do that, right? We should just expand like this, you know? So it's just an if-then process, right? It's literally just the previous candle reversing. How did it close? Let's say it closed like this, where there actually is no reversal, right? Let's say we opened here. Let's say the previous candle hit it. It hit the objective, but we didn't reverse. So then I can still trade this candle under one condition. It has to reverse, and it has to have a small opposing run, right? Because why did it have to have this small opposing run? To support expansion. Does that make sense? You can use that on all time frames, by the way. It's every single time frame. Why 6 a.m.? Because that's a previous 4-hour candle, right? If 6 a.m. reversed, then 10 a.m. will expand. That's how I anticipate 10 a.m. expansion. And most economic drivers are within that candle. So you have like 8:30, 9:30 inside of 6 a.m. candle. What day? I don't really live stream every day. I just do it whenever I feel like it, to be honest. It's not like I have a set thing where like Kiko, I don't stream every Saturday. I have been streaming more though. I'm gonna be streaming for the lens a lot next year. So if you're the lens, yeah. How does the 4-hour correlate to how the market should move within that time? 4-hour, it's just viewing price within expansion candles. So like I'm doing price within a daily expansion candle, within a 4-hour expansion candle, and I'm aligning that, right? Because I don't want to fade an expansion candle, because essentially it's like this. Let's say the open is like right here. Let's say your reversal point is down here. Okay. So you want price to reverse off here. But if the open is something like this, and we hit this key level, and then we reverse, right? It's much more likely that this is going to lose, right? Because you're basically anticipating the wick to form, which is hard to do. You actually don't know when the wick is going to form. But you just let the candle close, because it could easily do this, bro. It could easily just stop you out again, right? This would just be a wick at one time, then it just fills in the body, right? Let's say it does this. Let's enter. I don't know, dude. Let me try to make this better. Let's say you enter here, right? And then the candle closes, right? So it's going to close like something like this. Fuck, that would be nice. It's going to close an expansion candle. But you were hoping it closed like this. But what if it closes like this on your entry? Then it could easily stop you out. It could easily just go open, low, stop you out, and then go, right? That makes sense? So it's a lot easier. You don't want to catch the reversal. You don't want to catch the reversal candle. You trade the next ones. You know how T-Trace always says never just wait for the reversal to form? That's what he means. Wait for the candle to close. But I'm a little bit different, where I will catch the reversal candle, but it has to be an expansion candle. That right there, what I just showed you, is not an expansion candle. So it's just phases of price aligned with open, high, low, close logic. What's up with these? By the way, there is no best time frame. Like, I can go to the freaking 3-day chart. I mean, we obviously are going to use the daily chart because we're trading intraday, like price action. But like, you're going to see the same stuff, the same logic applied to any time frame, dude. Look here, right? This candle not going to reverse, and this candle's going to do the next one. If I go to this one, this fair value gap, it's not going to expand when we hit this. Why? Because we deviated too far from the opening price of this candle. So it's going to expand the next candle. What's the next one? Right? This low gets taken on the other feed. Not going to reverse this candle. It's going to do the next candle. Yeah, this fair value gap or whatever. This candle hits the fair value gap. We can start to already anticipate price to reverse from this low, right? Because the reversal didn't form this low. So we know that price is likely to reverse, and basically 1 or 2 candles, like I say. Why would we even anticipate that? It's because price is not going to just mess around. That's consolidation. It's going to do it quickly. It's going to leave a key area quickly. So that's why I have that rule. Like, we can go to anything, bro. Look here, like this fair value gap. The majority of the expansion is the next candle, just because I have that candle form. You have this fair value gap. You have this fair value gap. This candle hits the key level, frame reversal off that low. This candle hit the key level, frame reversal off that low. If the reversal gets formed intra candle here, you can trade the expansion. Why? Because of the small opposing run. You know what I'm saying? It's any time frame. I can go to the 69-minute time frame. Like, you're gonna see the same shit. Okay. Look. Let's go over here. This candle reverses. Look at the opposing side of that. Not reverses, but hit the key level. Look at the opposing side of that. You have failure swings, right? So you can frame the next candles to this low. Here, right? Open, low at close. Why can we even trade this one, by the way? Because we have S&T this day, right? And this is the only area for price to reverse from. So this is when you can actually trade. It's not really fading a candle. This opposing run is not insane. But we have a news driver here. So again, that opposing run into the low. You're gonna see it on multiple time frames, so it almost doesn't even matter, bro. But yeah, any time frame, I'm telling you. Like, look here. Right? This candle hits key level, we expand the next one. And I'm really looking at highs and lows when I'm looking at these manipulations. Because I'm usually, yeah, like I said, I'm really using this rule for manipulation. It's because we should leave a manipulation quickly. Okay, so this candle hits the key level, the next candle reverses, right? You can even look up here. This candle hits key level, the next candle opens to the highs, so you can frame a reversal off that high. Small opposing run. So yeah, it's any time frame, man. The gold trade you took Friday swept and came back to the range. So did Monday. How to differentiate which side of the market wants to go? Friday and Monday. I think Friday manipulated. No. Where's this? Yeah. So look, if Friday manipulates, I already went over all of this, but it's okay. If Friday manipulates, if we're going to expand away from this, then we would what? We would see some sort of profile supporting a bullish narrative. We would see that opposing run to support bullishness into the failure swings, right? We also have SMT right here. Go to the hourly time frame or something. I think T-Trade's talked about this. It's just not something that I like personally. Like, we just kind of gap up. Yeah, we take out a low. We have an opposing candle. When I come into New York session, there's not much I can do. Like, 8 o'clock opens right here. I see all these failure swings. Like, I'm just not going to trade it within that. It's just expansion, consolidation, expansion. But I'm not going to trade that. But when I come to like if you look at Tuesday, right, or Tuesday's close, or sorry, Monday's close, we trade into these highs, right? So now it's just like, are we going to reverse off these highs? If we look intraday to the candle, did we reverse already? We have the CSD down here. We have the signature, right? Somewhat of expansion, with expansion. But in order for this to be validated, you need to see something like this for the next candle. But as you see, we expand the next day. So that would be what? It would invalidate the idea of this being a manipulation. So if this is not going to be manipulation, we must expand somewhere. So that's what we look at here. I have a high to expand into, right? Look at the profile for here. I think we had SMT here. Let me see. Yep. So I mean, look how clean it is. Right. So the invalidation for shorts this day was Asia session trading higher, right? Making too far. There's no key level anyways. And then we have the manipulation of the daily range. So basically a classic buy day where London forms a low today. It's just SMT. And here's the signature of reversal. It's the expansion away from manipulation. Also aligned with a small opposing wick. Small opposing wick on the weekly chart. See that? Small opposing wick on the 4-hour chart. So here we have the previous 4-hour candle. It is manipulating, right? So I expect the next candle to expand. Do I have a invalidation level? Yes. I have an opposing candle internally to the 2 and 4-hour candle. So I expect the 6 a.m. candle to basically form its wick there. Right? Then you can trade your continuation. Where was I at, bro? Here we go. You usually enter at 10 a.m. when the 4-hour candle start. Then you hold for the 4-hour. I also trade within the 6 a.m. candle as well, though, because look here, I traded that here on gold. So if the 6 a.m. candle manipulates, and it also has that small opposing run, then it can just expand. Like, look here, 6 a.m. candle. We have that small opposing run into a reversal point. I can just trade inside of this candle. I don't have to wait for 10 a.m. Look what happens if I wait for 10 a.m. I already missed the best entry. You know what I'm saying? I don't want a long way up here. I want a long down here. So it's like an if-then thing. It's all the same thing, though. How to know when to enter on 15 minutes, CSD, 5 minute, 1 minute. So the 1 minute time frames are when you have 5 minute or 15 minute protected highs and lows. Then you can drop down to the 1 minute inside of those areas. 15 minute, it's going to be when you have 1 hour, 4-hour protected lows. Then you can use the 15 minute, 5 minute. But like I said, like once this gets taken out, bro, I'm not looking to trade. I'm not looking to catch entries anymore. I'm looking to manage. I'm looking to get in here between this low reversal point to this high. This is the hourly model. I'm looking to get in ideally within the 0.25 and below. You know what I'm saying? Ideally below the 0.5. That's ideally where you want to get in. And then everything after that is just management. I'm just managing until we hit this high. You know, that's ideally how I look at it. I did a recap on gold. You have to rewatch the stream. I went pretty in depth. Oh yeah, EU was pretty clean profile. If you go on DXY, it's the same thing basically. Like, so Friday. So if you guys want to trade Monday, just look what the previous day did, previous week did. You have Friday hitting this external low. Again, what's the rule? Look at the opposing side of manipulation. You have failure swings. So that's the easiest draw for the week. It was kind of lackluster in my opinion, like pretty lethargic, kind of slow. But yeah, these highs are like an easy draw, you know. And again, we reverse in 2 candles. It's either like candle 1. I count this as candle 1, kind of like I don't expect this candle to reverse. So I want the candle to reverse. I want price to reverse in 1 candle or 2 candles. So here we reverse, but we don't expand. So the next candle will expand. We just form a candle 2 closing here. So yeah, you can frame reversal off this candle to low. And you probably get some decent expansion. We just close like this. Where's the low at? Okay, yeah, like Monday opens up. And again, what did Friday do? Friday manipulated, so Monday expansion. But do you see the lack of willingness to trade the continuation? Like just chop pretty much. So yeah, then we revert back to this low. There's always an invalidation for continuation. For framing point of reversal on daily time frame when low or high of days getting put in to be always need that to. Okay, like if you're gonna look at the easiest ways to frame reversal, I say the hourly time frame aligned with the daily profile. Like if you just try to frame like a bunch of 15-minute like CSDs and stuff, like it's just you're gonna get confused. You just revert to an hourly time frame. It's just so much easier. Like that's how I trade. That's why I'm able to trade like all not all these pairs, but as you see, like I have a lot of watch lists, and I get plenty of trades, dude. Like I get a lot of trades a week, honestly. Um, like if you look at NG, sorry, not NG, HG. I already went over this, but essentially the previous day reversed, right? And then I have an hourly swing point. I look back on the previous sessions. You ask yourself, did they manipulate? Right? The answer is no. Right? Just consolidate. This is the ideal. Ideally, you don't even want the previous sessions to actually do anything. You either want it to consolidate or like retrace like this, something like this, like leaving low resistance liquidity, and then you want New York to like manipulate and expand. So that's what we have here, right? I can go to the 30-minute time frame. We manipulate the high, right? You can't reverse from consolidation, so align that with a daily opposing wick, which supports expansion away from the manipulation. And I'm trading that basically. So it's an intraday profile off an hourly swing point. The open is too far away, so kind of like this. So within expansion candles, right? If you look at the market, every single expansion candle that closes with a large body has a small opposing run. So look at this expansion candle. We have no wick here, right? If you look at these 2 candles, these 2 bullish candles, we have small wicks. If you look at this candle, this candle, this candle, small wick, right? So I want to trade these candles. So you can use that as a filter, right? You can use that literally as a filter for your trading, right? If I want to trade this candle, if I want to trade this manipulation, it's almost like a confirmation too, and a invalidation, the small opposing run, right? I can trade this candle because that's a small opposing run. I go to the hourly chart and see what it looks like, right? This looks pretty clean, right? You have a clean series of down close candles into this low and displacement away. So that would confirm the wick of this candle. So I can frame longs continuation towards these low resistance highs, right? But if it looks something like this, so what candles do we not want to trade? We don't want to trade reversal candles that look something like this, right? They don't have any expansion to them, right? We have a large opposite run for the daily open. So if you're framing shorts, let's say from this high, I'm not going to trade this day because it's more likely to close either bullishly, it's more likely to close bullishly, just the way the candle forms, or an indecision kind of like this, right? That makes sense. Anyway, like this, for example, here, like I would never trade this candle bullishly because of the way it formed, right? We're deviating too far from the open. So this would be the next day model where you would trade the next day expansion, right? This candle reverses, and we want to trade the next day. You're gonna have that small opposing run. I think this whole stream is like alignment, basically. Usually occurs at here. Yes. Highs and lows as a reversal point. So PD arrays are just reversal points, right? Where you want to see price reacts from, trade away from. So are highs and lows. The best, in my opinion. How long have you been studying to become profitable? Dude, like 5 years, but majority of that was a waste of time. 3 years was a waste of time, complete waste of time and money. I probably been trading ICT for like 2 years. Probably took me a year and some change to start to get it, you know. But like just this year alone, like I've grown so much, you know. When did it click and you started to see everything much cleaner or much clearer? A lot of it was just filtering stuff out. So like I'm not trying to look for a daily bias every day. I know exactly what I'm looking for. I know my model. And again, it's just manipulation. I don't care to see this. For example, like you have to learn to let a day go, bro. Um, so like this, it's really my ability to like just identifying, like filtering stuff that I don't want to be involved in. For example, this day, like if I want to trade this day bullishly, I'm not going to trade it. Why? Because there's no manipulation. So I'm just going to let it go. You know, that's an example right there. What's another one? This day, I'm not going to trade this day because it doesn't align with the profiles I want to see. So I'm just going to miss out on this day, stuff like that. And identifying like phases of price, how they should look. When I see a manipulation, like it needs to look a certain way, or I'm not going to trade it. And we can talk about that on another stream, but like there's so many ways to filter price and stuff, where like you can just not trade it and avoid it and avoid a lot of losses and stuff. Were you in any one-on-one mentoring, or did you? No, I never done a one-on-one mentor. I never got mentored by anyone one-on-one, but I learned from traders like the MXM trader, T trades, AM trades, even a fees, bro. I learned a lot from fees. Kiko, you know, I haven't learned from ICT yet, I'll be honest. I don't really watch, I've never watched him stuff. Are gap fills like fair value gaps? So even like a fair value gap, guys, like a higher time frame fair value gap, that's a reversal point, right? But I still want to see manipulation out of it. So like if you have a range, right, fair value gap, I need to see manipulation out of that for the trigger for expansion away from the ski level. So I'll show you an example of this. Whoops. I'll use fair value gap as a draw on liquidity a lot of times. But if you look here, this fair value gap here, right? It's just a bunch of fair value gaps, right? But if I want to leave this area, I want to see manipulation. Okay, so clear manipulation, right? Of this low. And I want to trade this high. Ideally, it doesn't look shitty like this. Like, so it's pretty gross, to be honest. Just not really that strong. But you see this thing on ES, it's just a little bit stronger. So I ideally want to trade this. Then you look at opposing PD arrays, right? Start to fail, support price, blah, blah, blah. That's the ideal way I want to leave a consolidation. And it doesn't have to be a daily manipulation. It can be an hourly, 4-hour, aligned with the weekly profile to expand away, to get a weekly expansion away from it. Can I go over the tools that I use? These tools? Sure. I'll go over them briefly. So I have position tools. I have premium discount. I have like this, you know, premium discount. I have like quadrants. I have constant encroachment, like that. I have this box, just a bunch of different, whatever. And if you want to do a constant encroachment like this line, you do this middle line. You can check that. Text, it's really just for annotations, like, yeah, line, curve for swing points, for low resistance liquidity. That's why I use just a line for like time openings. This just for teaching purposes, honestly. This is a projection tool. You can watch T-Trade's video on that. What else? Obviously, just a line for teaching purposes. I don't even know why I have this. That's it. And to get it on your screen for this hotbar, to get this, you have to go over here and you have to star it. So if I want to star this, see how it appears on my hotbar. Did you answer my question? So it was making food. I don't think you put a question in, bro. What would I? Oh, hold on. I'll have to read that. It's way up there. We get lost. What pair does gold correlate? I already went over that. It's Euro XAU and silver. Why do they trade day before high impact news? I mean, like, it's just an if-then process. Like, if the previous day manipulates, then we can expect the next day to expand. It's literally just if-thens. The market is just manipulation and expansion. And that's the way I look at it. So I can use that economic folder as like confluence, basically, for expansion the next day away from the manipulation. So almost doesn't even matter. But ideally, you want to see red folder manipulate, like intraday, stuff like that, to then trade away from. And you can use it for continuation stuff too. Oil SMT is RB1, so it's this ticker right here. It's right here. How do you trade 10 a.m. if we have 10 a.m. news? You wait for it. I mean, 10 a.m. news is not really it's not really going to impact the market that much. So you can wait, but I mean, I'll enter. But usually, like, in general, I don't enter at 10 a.m. anyways. Like, you're going to have a confirmation inside that candle regardless, because sometimes the candle actually has to reverse. If 6 a.m. didn't reverse, but hit a key level, then 10 a.m. still has to reverse. And then if 6 a.m. reversed, then the 10 a.m. high is going to form in some key level. So, like, you can just, like this. It's like a propulsion block or something. Like, it can look like this. Let's say this is 10 a.m. opener here. 6 a.m. it reversed, right? So the only area for the 10 a.m. Candle to form the low is going to be this CSD, right? The low risk buy. So you can confirm it with a propulsion block. Looks kind of familiar to something, but it's stuff like that. Like, you can still confirm it. Can you just go over random PA probably? Not today. I have to answer all these questions. Like, yeah, we have to do like a back history for shit. I don't look at the cryptos. Is that stream going to be recorded to watch later? Yes. 16. What if a 4-hour candle has reached the key level? The first hour for what? In the first hour, for example, and the opening is far away. Would you scan for an idea on lower time to fade that 4-hour candle? Wait. So you're saying the first? Oh, I don't understand this question on there. Oh, like, okay, so the only time I fade a candle, I have a diagram on my channel. It's basically, if it's a 4-hour candle, I'm trying to fade. So I'm anticipating a large wick to form. Well, I need to have a daily expansion candle. So the daily supports expansion, which outweighs the 4-hour. And I need to have manipulation. This candle has to like manipulate for me to expect expansion back into that candle's range. That's how I do it. And a lot of times you're gonna have like high impact news folder or something that supports that expansion. Would you take this on Tuesday? Yes, I think. Where's the 10 a.m. open? Yeah, 10 a.m. open. So look here. If you guys were in my stream, I was saying that ideally I wanted the reversal of the 10 a.m. candle to form inside of this VPR, but it didn't, right? It traveled above this, so again it opened high, but then we form SMT, right, with this this ES and NQ divergence at a reversal point. So when I saw the strength switch from strength to weakness, that's a very good thing to see, right? And if you look at the hourly time frame, we have the first hour in that 10 a.m. candle basically reversing, and then the next hourly candle expanding. All right, so you're gonna see the same thing internally to these like the hourly candles. You're gonna see open low high closes inside of a 4-hour open high low close. If the 10 a.m. candle, first 10 a.m. 1-hour candle reverses, then the 11 a.m. 1-hour candle will expand. That's all internally to the 10 a.m. 4-hour candle. Let me go over Ethereum. Yeah, in a minute. I'm just trying to catch up here. How do you make practice to your model? My model is really simple. Like I said, it's just trading with manipulation. I already went over it, so you can rewatch it, but if you missed it out. But I backtest. That's a simple like it's I guess. So wait, hypothetically, what candle would you trade out of that ES fair value gap on daily or daily time frame? The wicks are too large. Okay, so look at this. I know exactly what you're talking about. I think it was like ES, right? So I think I trade this day actually, but here's why. So we have Monday consolidation, right? So I already do not expect this to be the high of the week, right? So this is the only place to reverse off of to get back to Monday's high. So when we reverse like this pretty much, and I see 6 a.m. manipulate, then I would expect 10 a.m. to expand, right? I did trade this day. I remember this shit. And again, you have a news driver, or sorry, you manipulate prior to 9:30. So when you see 9:30 fail to expand lower and provide a continuation signature, which is consolidation, yeah, I actually traded this day. That's a good sign, right? And also, is there any established high today? No. So this is the profile I trade a lot, bro. It's a manipulation back to session highs. Like you see it back-to-back days here. You have an hourly manipulation here. When do we actually expand? 10 a.m., right? Right there. When do we actually expand? 10 a.m., you know, back to these session highs. So you can fade a daily candle, like I said, but the narrative needs to be like this makes sense to go higher, right? Just with the weekly profile, the daily profile, it makes sense. But it doesn't make sense to form an expansion candle. That it does not make sense. Why? Because of the open. So when you're fading a candle, right, you need to adjust your targets. Basically, you need to trade either back into the daily range or just targeting basically the day's high, right, around the opening price, because we don't expect price to expand past the open. You know what I'm saying? So there's a lot of logic that goes into like open, high, low, close. Like it's a bunch of shit. I already went over this fade candle. How do you use IPTA cycles? Oh, I'm already okay. Cool, dude. I already caught up. Let's go. How do you use IPTA cycles to your advantage? Like, what does having knowledge of how price moves? Okay, so this is a really good question, right? So basically, basic price gives us the if-then approach, like to looking at price. So here's how it really goes, right? when we expand into an objective, a high or low, we don't know what's going which phase is going to occur, right? It could be consolidation, it could be retracements, or it could be met with a reversal, which is expansion met with expansion. So what each phase of price has is a signature, right? You have consolidation where price is just in a one-sided move, or you can see on the higher time frame an inside bar, right? Where we just stay inside the previous candle's range. We all know what a consolidation is. A retracement signature is price leaving an area without manipulation. And it's just like a slow, deep retracements, right? So both of those signatures I just showed you, both of this is actually a continuation signature, meaning that price is going to expand again. Price has to expand again when you see this, right? So that's what helps us, right? It's the if then. So if we get one of these two signatures, we have to expand again, right? So if you're in a market maker buy model, if you're trading MXM in general, you have the original consolidation, blah blah blah, reversal point. You want to see those two continuation signatures. Like you want to see consolidation, manipulation to then expand. You want to see retracements, right? Because that's basically supports continuation towards the higher time frame draw. That makes sense. In a way. So when we expand into a high that you're anticipating a reversal to form off of, like this, but we don't get reversal, then this helps us to know that, you know, this reversal is not put in yet. We have to expand again into this high, and then we can potentially reverse. Then you're just looking at the reaction to this high. If we expand into it, expand away, then there's your reversal signature, right? Once you get that, once you get the reversal signature, price reverts to either external range liquidity or internal range liquidity once we manipulate. So yeah, it can help you with a lot of things. Like if you inside of a dealing range from high to low, but we do this at the point of retracement, we just relieve failure swings, then this adds to the narrative for this internal range to external range model. Does that make sense? And then in order to actually anticipate expansion, because we know price is going to expand, right? We know that. But we don't know when until we manipulate and then expand away. So what signature is this? It's reversal. It's expansion met with expansion. So then we can anticipate expansion into the generated sell side rate. Like we don't ever want to trade a consolidation that doesn't manipulate. It doesn't even have to, like the if then approach to consolidation, like I said, is expansion. So expansion, consolidation, it can just expand without manipulating. But we can anticipate when it's going to expand. We can only do that when it manipulates, right? So in order to actually trade the expansion, it must manipulate for us to actually anticipate that. You know what I'm saying? So that's why I say like obviously we want to trade expansion, but we can only ever anticipate it really when we actually manipulate, you know? That's why I require manipulation. Like some would say like a CSD is a form of confirmation. Let's say we have a range, right? We come into the range and we get some sort of CSD in here. But if there's like failure swings, like you're gonna have something like this. Let's say it's the lower time frame here. Let's see. Let's say this lower time frame, right? And you're counting this as a CSD. I would never count that as a reversal. To me, that's pattern trading, because if I'm looking at the phase of price, like there's no manipulation, right? So it's ideally gonna fail, you know. So I filter price through phases of price and open, high, low, close, like I said, and profiles. Open, high, low, close is profiles, by the way. It's the same shit. when okay, so how do you know when the distribution would happen? So it should happen. We don't know if it is, but we expect it to, right? And most times it does. But let's say we expand to a low, right? And we have no established high up here, right? So we want to trade these highs. So it should expand away. If it expands away, there's your confirmation, right? You can have a CSD and whatever, right? With SMT ideally. But what's the invalidation? If we just chop like this, we just chop or like come back deep into the range, that's invalidation. Price should never do this. Like it should never come deep back in the range before taking out an objective. That's an invalidation. So like it's very easy to filter stuff out. Like it's super easy this way because you know exactly how expansion should look. It has its own signatures too, and it doesn't make deep retracements. That's invalidation. So each phase of price has a signature. How do you confirm this week profile? Yeah, it's a bit hard. Like I don't even look at it that way. Since like I see this, I'm looking at more so like phase of price. So again, when do we expect a new phase of price, guys? We expand to a high, right? Or after a series of expansion candles. So here we have a series of expansion candles, right? So we can already expect a new phase of price. And I want to trade back into this range. So what do I require? A small opposing run. And so on ES, it's essentially like Wednesday manipulates, right? It forms an SMT, right? They're very uncorrelated, so it's a bit hard. Like you can't even call this a classic buy, like classic expansion week, like maybe I guess, bro, but like it doesn't really expand much. It expands one day. So it's like hard. Like not every week is gonna be a clean profile, but I don't even need a clean weekly profile to trade intraday stuff. I just need like here is enough, man. Like I have Wednesday reversing for Friday example. I have a swing point off of that manipulation, off of this opposing candle. So I gotta frame this bearish expansion candle, but I'm really more so really focused on how the uh, how the framework looks on the hourly time frame to form an expansion candle on the daily time frame. Because I mean, like honestly, like even if this isn't a perfect weekly profile, I can still anticipate this expansion because the daily profile. Like I have manipulation here, right? 6 a.m. manipulation. I have no protected low at the low of the day, so I can just expand, right? So this idea of like getting this is another thing I struggled with for a long time, was like demanding some clean profile. But dude, you're not gonna get it like a lot of times. Like just view it as like a phase of price, to be honest. Like coming into this week, you can already anticipate this being either a consolidation or trading back from the range. Why? Because what the previous week did, it expanded into an objective. So we already expect a new phase of price. And you see that early on in the week is shit. Like we are obviously like expect this ideally, right? And then we form some sort of like SMT, I think, this day or something. And then we start to expand back in the range. I forgot when it was. Maybe it was right here. Let me look on ES or NQ. Yeah, so you see how it takes the high out? So AM trades traded this, right? I remember that shit. So yeah, if this day manipulated, then I can look at the other side of this manipulation, and what do I see? Failure swings, right? So we could say it's a classic buy week, sell week. Technically is, but it's not like it's not that it's not really off of that like necessarily. It's just like I don't know how to explain it, bro. But like this is not really a classic sell week. It technically is, but the framework is kind of gross. Like if you look at the daily chart, it's pretty disgusting, right? I guess it technically is. Yeah, I don't know, but I'm really going off of what I see at the opposing side of manipulation here, not so much the weekly profile at this point, right? Because it's not confirmed yet. You know what I'm saying? It's not confirmed yet. So once Wednesday expands away, And notice what we do here. Again, this is so interesting, guys. Like this switching of strength is really interesting. So if the previous day prints of a weak SMT showing weakness, in the next day we have some sort of model in the hourly time frame supporting strength. It's really weird how that works. I see it all the time, and the SMTs work so much better. So you're going to see an NQ, we fail to take up this high. It's actually really interesting. Like, I'm gonna look more into it. Yeah, it's as simple as this, right? Look, this is how you can view price in the simplest way. So you can trade Monday, by the way. Why? At the opposing side of this New York manipulation, what do we have? No established low today, right? I traded this day. I don't recall trading this day. I traded this day here. Look at almost all of these days, except this one's pretty ugly. But this day here, look at is there established low today? Not really, right? We have just failure swings, right? So you can trade that. What do we look for? 10 a.m. expansion candle, 6 a.m. manipulation, 10 a.m. expansion. Here, give a 6 a.m. open, high, low, close, right? We don't need to have a 10 a.m. open here because why? It's the only area for the reversal to form, right? So if this gets hit at 7 o'clock, I'm not gonna wait 3 hours for the freaking to trade. Like it's gonna happen quickly, right? So I can trade this. And there's no established low today. No established low today. Even this day on ES is really clear. If I go to this day, right? No established high today. We form SMT. So again, it's that thing where it's catching up. So we form weakness SMT, we form bearish SMT, but then we form bullish SMT. So it's very interesting. I keep seeing that shit. But yeah, and then we expand, right? You saw an NQ this week as well a couple times. Very interesting. I think it's like kind of cool how that works. But yeah, you're just trading back to unestablished highs. Here, you're trading back to it. I traded this day. So this day, small scalp. This is all you need, man. Like you can just use this framework of just session highs and lows. You have a manipulation here, right? At 10 o'clock, 10 a.m. open high, low close into these lows. This is the majority of my day right here. And I can look to manage. If it wants to go lower, it can, but I don't even have to anticipate that, man. I don't have to be right about that. It doesn't matter. I know that this internal model here, that's already enough of a move, man, for you to be done for the day. You get this so many times across so many assets, man. So many assets. If I look here, are you SMT here? So expansion, consolidation, manipulation. Look at the way we leave the manipulation. It's expansion, right? We more so consolidate. Why is this a consolidation? You essentially have this inside candle. It's like here. We're not really going anywhere. We have a key level here. Then we form SMT. Then we expand. So you see how SMT, which is just manipulation, right, is the trigger for expansion every single time. Pretty much. How do you establish whether a protect? So you're gonna get a feel for like when to even anticipate this, like because how do I explain this, bro? I don't really know how to explain this that well. Like here, I don't. It's just experience how I knew it was gonna reverse this day, but even here, like where can I find a good example, man? Like here, for example, let's say. Like if it's gonna be bearish, there's absolutely no reason for us to keep going higher this day because then we would just be fading the daily wick even more, right? And we've already manipulated, right? So I don't know how to explain it. Like on gold, for example. Like, this is literally the only relevant area for manipulation to happen, right? This low. Like, why would we need to go lower? You know what I'm saying? I don't really know how to explain that in like a mechanical way, but I don't know. You're gonna see it so much that it almost becomes like, I don't know. Like when I backtest, I know exactly like where I'm looking for the high and low of the data form. It's really just, again, that small opposing run rule. That's really the filter on it, honestly, for a lot of this stuff. But yeah, this is why like I revert to highs and lows, because there can be a fair value gap and all this stuff, and it's like too much PD arrays, bro. It's like if you just look for the most high probable one, which is manipulation, it's the best one. Then just use that. Just use that as your filter, you know? Here, the low of the day. This is anticipatable, dude. Like, why? Because you have the small opposing run. Like, it doesn't need to go over here to form the low of the day. Like, you know what I'm saying? Like, I don't know how to explain necessarily, but we form that S&P there. That should be the low of the day, and it should expand away in an aggressive fashion. Yeah, I would just experience, bro. Like, I don't. Through profiles, it actually makes it easier too. You long this saying shorts way more high probable. What are you talking about? Keep yapping. You show example established low high day. Yeah, I've basically showed it a lot. So like back-to-back days here, but actually all 3 of the days, it's all manipulation. If you want to filter with SMT and manipulation, literally it's the easiest way to do it. Here, SMT manipulation. Here, SMT manipulation around the open price with the small opposing run. Here, I'm not sure if there's SMT. I don't think there's SMT here. But again, we're trading the previous high, small opposing run, spanning away, then we form SMT. I traded these 2 days right here, trading away from the established higher low day. I would never want to see price come back to these areas here. That's your invalidation. Here, I can't be confident that there's an established low today. You know, I really can't. Like, this is just kind of shitty, you know? So there's days where I don't trade. I traded this day. Right? I have failure swings up here. I have the previous day's high. Be taking out lows, right? So this is the only area for the low data form, pretty much. I'm not even going to use this one. Why? Because it's a failure swing. This is a failure swing to all of these lows, so it's not important. That's another thing. Anything in here, not important. I'm never trading this shit unless there's an S&P here or something. Because this manipulation of these lows and whatnot is just internal. It's just a failure swing, so I don't really care. It's not an important high or low. But yeah, this right here, look at the opposing side of that. You have failure swings, right? So, and you see the aggressiveness that we leave these areas. That's why you want to trade manipulation. You can't have this without manipulation, to be honest. Unless the previous day manipulated, then it, you know, Asia, London, like expand and shit. But yeah, just require manipulation. Like, look at here, dude. Like, we get manipulation. That's cool. But where's your invalidation? It's essentially right here. Like, there's 2 areas. Like, really, I don't even want to see this low get taken, to be honest, because I want to see opposing candle support price. That's one invalidation. But the next one would be this for sure. Like, when we don't reverse from here, see how we don't reverse? It's bullshit. In the next candle, that's a complete invalidation of this whole day. Like, it's not expanding, right? We don't do this. We don't do this in expansion, right? Look here, another good example. I don't care about this low. Already went over that. Sorry, already went over that. Try to find an example here. Look at this good example. Oh, this is Thanksgiving. Never mind. But it's kind of the same thing, right? This day formed some sort of candle to. It's really not. There's actually, it doesn't even show the daily candle. I'm not gonna look at that shit. Not that good of example. Like, you're gonna see a lot of times. Like, I don't even trade these days, but this looks like a decent example. right? You have price trading way, right? So the daily opens here, right? So this could be a model, right? If you have like some sort of SMT here, you look. So yeah, see how silver we take out all these lows, take out all these lows. So when you see price manipulate this low, if A is a session high of the day, this candle manipulated created SMT, I can expect 6 a.m. candle to expand. And this is assuming that the narrative is set to go higher, obviously. But that's pretty much how you look at it. If I go on like CL, I trade CL Friday. Look back at what the previous day did, right? Expansion, we have expansion. A lot of people are going to pattern trade this candle to closure, but really, you're inside of a weekly profile. You have a draw on liquidity to the left. And the previous sessions just gave it away, right? Because we just consolidate. Then we manipulate this low with the SMT. So now this is the protected low. This is the only area for price to form the low of the day at as well. I wouldn't want to see it come down to this fair. Like there's no reason for price to, once it manipulates low, no reason for it to revisit this. So this is when you see opposing candle support price, blah, blah. Now I entered,
One sec.
I entered it here, basically. Right here, first pulse were there. Looking for this high, we never come back. At least any time frame. So yeah, so like I use different time frames to just find fair value gaps pretty much. You can do that. So like on one time frame, like the daily, you might not see a fair value gap. For example here, like nah, that's not a good example. Let me just look around real quick. Maybe something like this. Yeah, like you don't really see a fair. There's a fair value here, right? You go to the 3-day, it's like it just cleans it up. You have one solid fair value gap. So it's really to just see one solid fair value gap, or to see if there's like any. Like sometimes the daily won't even show a fair value gap, but the 3-day will. You know, like maybe right here, like we'll look or something. But, like if I was to pick a fair value gap inside of here or something, let's go like the 3-day. Clearly, I just target this low, something like that. Maybe right here is an example of one. See, like right here, you don't even see a fair value gap here. On the 3-day, clear fair value gap. But fair value gaps are just highs and lows. So like if you see a high or a low, you go on a higher time frame, that's a fair value gap. That becomes a stronger draw on liquidity. All right, I'll probably wrap it up soon. Yeah. Very nice listeners. Already T-Trades videos. T-Trades videos are relatively simple, I would say. Very straight to the point, very good videos. Yeah, like so it's manipulation, but SMT is manipulation essentially. Like it can look like this too though. Like it doesn't have to look like this, by the way. Where one asset does this, the other one does this. It doesn't have to look like that. It can look like this, where both assets manipulate, but the difference is there's like a SMT with like some low to the left or something. So let me redraw this. Look like this. So one asset takes out this low, the other one doesn't, but they'll both take out this low. Yeah, still different ways. But yeah, I look for SMT manipulation, form high and low of the candles to basically trade away, basically to trade away from a protected low towards a draw on liquidity, right? Because you're gonna have a draw on liquidity. You're gonna have a draw on liquidity at all times probably. But to actually get in like position, you need to trade away from an established higher low. So even if it's like an hourly draw on liquidity, if we're way in premium, then let's say I want to frame like something like this. Okay, hold on. I want to frame something like this, like an SMT here, a close over this candle. You know, now I have a protected low to trade away from, because the other asset did this. It took it out. So, which is a protected low. But we have SMT, see it even better. So it's just this fractally pretty much. Like if you look on CL, I want to trade to that daily draw. Well, in Asia session, I don't have an established low. But in a London session, we create it. So even if you're a London trader, ideally we consolidate always in Asia session. You would just wait for this low, this to get created with the Portland asset. Pretty much. See how we take it out there? So now you can anticipate expansion to the high, you know? Instead of just as soon as freaking, instead of this, like, instead of like, you know, thinking this is a market structure shift, this fair value gap, blah, blah, blah. No, you need to wait for an established low to trade from. Because you're basically trading away from failure swings at this point, which you don't want to do. You have a playlist, but I wouldn't even think of that. You can't short. You can't. This trading stuff, you can't shortcut, bro. It's too hard. It's actually way too hard. Pretty much impossible to do. Midnight? I don't use midnight open. I think midnight open's fake, honestly. Like it's not actually like a thing, you know. Like 9:30 is an actual, like real time opening. That's a fact. Midnight open is a IC theory. You know, that's my opinion on it. I'm not gonna lie. I use the openings of, you know how like ICT use the openings of like midnight open for power 3. I use the candles because again the candle is the real open. I think it's much better. Just like macros, literally. Okay, I don't want to say fake, but it's literally only because of the opening prices of the new candles. It's not. I don't know what the 10 minutes prior to an open is. I don't get that, to be honest. I can get the 10 minutes after, but 10 minutes, I don't understand it. I just don't buy into it. Support resistance? Tell them that it's cooked. Oh, okay. Where would I long in London? So first, we have a 4-hour expansion candle. Yes, so this 2 a.m. candle, right, creates the open low at close. So you'd want to look for a CSD. I mean, it's pretty small, pretty much simple as this. I mean, ideally, you want to get in before we take out highs. So like, there's this right here, lower SPY. I wouldn't long this order, like I wouldn't long this order block. I'm not gonna do this. Like, I'm not gonna do that. I would do this though, because what you have here is you have the hourly open. Now it's confirmed by an order block, right? So if price is going to go open low, away from manipulation, mind you, then it would have to disrespect order flow, which is not likely to do. So basically, the hourly low is protected by an order block. So like these 2 entries here, Oh shit, I just deleted my indicator. So for the daily New York session expansion manipulation trade, which just replay a previous session. Okay, so hourly swing highs and lows, not just this session, because you could have something like this, like let's say you want to form a reversal off the sessions, so we do something like this. But this is like Asia lows. This is London lows. This is essentially a failure swing. So like it's not actually that important. This is the important low that you want to actually see manipulated to the next
Port Low is a small village in Cornwall, England,
What
on
is
the
Port
Roseland
Low?
Peninsula, in the civil parish.
Dude, I don't know why that's on. Oh wait, right, and thank you for SMT settings. Oh, there's no settings for SMT. SMT is a concept, not like an indicator or something. 1 hour CSD, and then it goes down to 5. Tracing down to that kilo. 5 minute? Yeah, I do. But there's like a T-trades concept to his model that I use, which I can't give away. Yeah, I'm not gonna give it away. But like lens members know what it is, pretty much. Which is a really high. I didn't make that. It's like a really high probability using open analyticals. How to confirm it? SMT CSD within a higher time frame expansion panel. So like an established low for me, it has to be like almost a very low or high of the day. Like it has to be forming the higher low of the day. Like let's say Asia lows are here, we expand away or something, we come back. If we just take out this low, I don't really count that as established low. I need to take out the actual low of the day, forming the high of the day. That's how I would actually view it. That's probably a good way to explain it, right? Like it must be the higher low of the day, pretty much, damn near. Yeah, probably gonna wrap it up there, bro. That's pretty long, right? How long is it? TWS? 3 hours, dude? Holy fuck, what do you think it will be easy to enter a trade this month? I think it was a very clean week. See, I don't look to trade every day. Like I don't have bias every day. What I just showed you are my requirements to bias. And if you just use this as a filter, it is the highest probability like freaking thing you could have. Like so it's like who cares if most of the month is bad? Because the good days are likely going to present my approach. I'm sorry, but I just want to ask. You guys always talk about volatility drivers. Have to understand, but can't. Okay, so like for an established low high of the day, if that is formed from a volatility driver, then that is ideal. Let's go on NQES. So we can use 930 every single day. Right, so what we have here is we have a reversal point here. Right, so if you're going to use the 4-hour candles, like I do, right? 6 a.m. candle hit this objective. I want to trade the next candle lower. But when you combine this with a volatility driver, you see how 930 made the opposing run into the draw, and we're expanding away. That is high probable. You know, does that make sense? When a high what am I saying here? When a news driver actually creates the manipulation, and for a continuation, let's say London high of the day or something. It's gonna okay. Actually, this is pretty good. It's a good example actually. So yeah. So we had news on Wednesday. We had CPI, right? So to confirm this London low of the day, S&P with YM here. To actually confirm this, when you see 830 actually expand away, that's your confirmation, right? Because it's no longer news driver manipulation; it's continuation away from the low of the day. So when you see 930 do the same shit, it's 930 at 930. Usually, I want to see it more like. Ideally, I want like a larger displacement lower so I can actually get in the trade. We see how 930 also fails to actually reverse. Just continues. That's what we want to see. Ideally, you want to see like some small opposing ground and then expansion through that. But I'll show you this example on gold, how I use the economic calendar here. Where is it at? So I already went over this, but we're gonna do it one more time. Let's go to the daily. This is probably my last question, by the way. So 3 days of expansion into objective, we can anticipate phase of price, new phase of price, so we can trade back to the range. You get that small opposing run on the daily time frame, which supports expansion. I can only anticipate this expansion because we have manipulation. We have the CSD here, right? We have signatures, continuation signature, expansion, tracement, expansion. So we have 830 news here. If I pull up the economic calendar. So again, in order for me to use this as a driver, gosh, why isn't it showing it? Oh, it's right here, my bad. All right, we have 830 moving up. I want it to like establish a relevant high, essentially. So when it does that and creates S&P and closes over this opposing candle, that was my entry for this day. I mean, I'm basically using the volatility driver as a continuation. Does that make sense? And the fact that it didn't actually reverse price and go up, that's my actual like continuation. Yeah, volatility driver is like news or like 930. That is the open, which is only an indices thing, by the way. No, I already got to do that. How do you? I don't really scout, but it's literally the same thing. Pretty much. Keep yapping up. Let me get some more. No, I want to leave. I need to leave, bro. Probably my question was yesterday. How do you use different time frames? Like we reach daily objective, then on what time frame do you look for sweep and CSD? It's the I'm framing the actual reversal on the hourly time frame. Then I can drop to lower time frame. So I'm framing everything on the daily, the 1 hour, and you're gonna have profiles that support that framework in those models. And then the candles, the way the candles actually are forming, support the profile. So all these things support each other. You know? Yeah, no problem, man. TWX will send it. His internet is like insane. Literally sends in like 5 minutes. I don't know how. My internet could never. But yeah, it's pretty quick. I'll just upload it on my channel. TWX to go full-time cameraman. Like on the 5 minute chart, what candle time frame is right? Oh, it's the hourly. Yeah, so this indicator, I think you can get a version of this indicator, but maybe not the actual one. This one might be like a paid one. I got it through a link from T-Trades, but I don't know if you actually like get it. But this is, if you can get it, this is it, by the way. Every time I go to the 15-minute time frame, or sorry, every time I go to the 1-minute time frame, it's showing the 15-minute candles. When I go to 3 minutes, showing 30, 5-minute, 1 hour, 15-minute, 4 hour, 1 hour, daily, 4 hour, weekly, and you can adjust it however you want. Like you can make this the monthly timer. I kind of wish you could add it though. I wish I could add it. But if you get TJ's fractal model, it shows it's the same thing, but it also shows the daily. It's pretty cool. It shows the daily and the monthly. What is this? Uncheck it by right clicking on the indicator. Wait, what? What extra thing? I don't know what you're talking about. What extra thing? Wait. Oh. Oh, I see. Thank you. Okay. Yeah, that's way better. Care Bear is fucking good. It's crazy work. It's in here. It's probably get that. Yes. Okay, let's see. Turn this off real quick. Yes, yes. So we have this like weekly candle 2 closure, right? If you look at NQ, we actually manipulate this high, which is a possible reversal point, right? Or your SMT with this here. So my eyes would be bearish. We are at all-time highs, so it's hard to anticipate that, but we kind of like the way we reversed here is not that clean, to be honest with you, because we didn't really expand away from this level. We made a deep retracement. So there's some intraday stuff in here, but we're really going to react to this low. It's going to take us low most likely, and what that's going to do, it's going to create SMT. You can already anticipate this SMT forming, and it's a matter of fact if this SMT holds or not. It's going to form like that. So we'll see if this forms. If this holds, ES will go and take out these failure swing highs. That's kind of the way you got to look at it. Honestly, can't really do much more than that. But yeah, man, they can't handle it. They can't sit in a stream for 3 hours. But let's say we're those. Yeah, I just don't like if we do something like this. I rarely like to trade away from Asia high and low today. Like sometimes that can happen, but it really needs to be a really high probable narrative, bro. Like for me to actually do that shit. Like basically the previous day would have to manipulate, so I can already expect like an expansion and shit. Especially when, so like this is actually an example of Asia can be high today. It's because we're opening up high in the range, so price wouldn't need to do this, right? But if we opened up, if this day here, if we opened up down here, sorry, maybe like, I'm trying to make this here. If we opened up like down here or something, I would not want to see Asia high today, right? Because it's too low in the range. But here it's high in the range. Does that make sense, kind of? Anyway, like you can already anticipate like Asia, London high of the days. It's when the previous day reverses and we close the day that manipulates, we close up near the highs. Like we haven't even started the expansion away from the manipulation. So that's when, isn't that ICD signature OB? I have no idea. I don't really watch it. Yeah, 4 hours was fucking insane. Did you find an example where you traded with? Sure. I already think of one. It was this day or something. Maybe it was this day. I think this day formed SMT. Oh yeah, this was a good day. So we have SMT here. The previous day formed SMT. So I'm expecting. See how we close? We open up like near the high, where it's like there's no reason to like do this. If we leave the opening, there's no reason to do this, right? So it's like it should just expand, you know. So here's an example of one. Like the previous day manipulates. You're gonna see it here, right? Creates a higher high, and it literally opens right there. So it's not like I need to see as soon as we start leaving this area. I don't need to see price come back, basically, but only when it starts to leave. Like that's when I wouldn't anticipate it coming back. But you can't really anticipate it until we start to leave. Here's a day right here. But I think there is some sort of like protective load. Yeah, there's technically the SMT here though. So it's like, look at this day here. So we manipulate this low. We form a swing point. So it's like, if we're gonna go to these low resistance highs, we should expand this day, right? Because we shouldn't hang around here if it's gonna be a true manipulation. We should expand in 1 or 2 candles, which it does that, right? So it's like when we just open up here, right? Like I don't really need to, once we like start to leave, I don't need to see it come back necessarily. So we have this SMT here, by the way, which is in Asia session. So yeah, this is a really good example, but it's London high today. But this is when you can actually anticipate it. It's because the previous day manipulated. You see how the previous day manipulated, but it didn't expand yet? This is when the early sessions the next day will expand or create the reversal. That's when you can already anticipate it. That's ideally what you want to actually see. You want to see that willingness to trade away. Yeah, okay, guys. So none of what PDA race works without. I mean, you can't really anticipate price leaving a fair value gap without manipulation. Like a CSD is your best bet, but when you have manipulation out of that key area, it's much better. You're gonna get a more expansive move, and then you have a true protected low. You know, like a true protected low. Like if I find an example of let's use like a fair value gap, for example, on the this might be a fair value gap here. Hold on. Yeah, it is. So like this fair value gap here. There's multiple reasons why this works. It's because internally to that fair value gap, you have this manipulation here with SMT. And then you have some sort of lower time frame manipulation, right? Take out this high and we form SMT here. So it's like manipulation and SMT, they go hand in hand for like anticipating next price and shit. Yeah, I was a good trade. But yeah, I'm gonna wrap it up, guys. So I'll catch y'all later. TWX will send me it and I'll post it on my channel. But you missed the whole thing. Circle. It's all good. I forgot it's not. I forgot it's like a 30-second timer. But it's like so much better that way. Not gonna lie. Yeah, I can post examples of my just a lot of the backtests I do. I kind of just post in a Discord. I don't know why it's called FX University. Don't mind that, but you can just go over some of this like real quick. Like, look here, right? Again, no established high today. This is not established high today because it's a failure swing, right? You have a failure swing up here. Coming from SMT, again, 6 a.m. manipulation towards the SMT. I want to form CNM expansion, right? I have the catch-up SMT that I'm starting to use a lot. I have that reversal signature at 9:30. Expansion math expansion for disrespecting opposing PD arrays. So yeah, I have so many examples. Like, dude, I don't even know. It's the same thing over and over and over and over. You don't look for it. I haven't really looked into it, but it's essentially the same thing. Like, I use it with 4-hour candles, like literally, like, so it can be applied to anything. Like, look here, this candle here. That's actually not true. Actually, no, it's actually not true. But you can use the same logic though. Like, look here. So this fair value gap or whatever, right? You have a draw though, basically, essentially. You have a draw. This candle hits the fair value gap, but I know AM doesn't use fair value gaps. So he would essentially just refer to this candle's high as the reversal point to then get to these lows. I think that's how he would do it. Not really sure. This as well. It's like you have this candle reversing. So you expect the next 7-hour candle to expand to lows. So it's really the same thing. Like you can see here, you have this candle creating the low today. The next candle expands. You know, you have this here. You have this candle sweeping out this candle's low, but also forming an order block for continuation. So you can assume this is the low of the day. You can expect the 8 AM candle to expand towards highs. You know? So like I could very easily use it, but I don't need to necessarily. But I'm gonna have to look more into it because it's gonna be like we mainly trade fractal. So the way I trade is very similar to the fractal model, like where like it just presents like I don't necessarily trade it. I don't need to have the fractal model to trade, but it presents so much just because of the way I trade. Like I trade within candles anyways. So when the candle is a candle to closure, I might as well trade it. It's like really similar. But I use a lot of its concepts. So you know the intra-candle CSD princess? I use that a lot. But I'm pretty good with his model though. Because it's like I said, it's so similar to mine. My model's win rate. I have like some, like it's usually like 65, like high 60s or something like that. That's what it's been for my live trades. And so like my back testing and live trades have been pretty similar. If I can just pull up some stuff. Like here's like mid 60s, around 3R, 400 trade there. This is like a little bit better, 72%. Oh, that's nothing though. It's only 13 trades. But this one, 6. That's only, yeah, like it's like 67%. Like usually, like if I refer to this as well, I was doing this like yesterday or something on gold. 65, around 2 to 3R is usually what I go for. Yeah, that's maybe should that something around there. There's like different ways you can look at it. Like if I was only counting, you know, the win rate with my A+ version, it's going to be a little bit higher than that. Versus trades, I'm going to be honest, like continuation trades are my worst performing. Like probably like 50%. Like I get stopped out sometimes. Like just trading after the reversals form like too high in a range, you know, like that's the easiest way to get stopped out in my opinion. You trade prop firms? Yeah. I traded Top Step mainly, but I also have MFU. Next year might look into Apex, but they just so sus. I've seen they just don't pay out and shit. So I don't know. Also seen like Trade of High, but Top Step is the best, dude. The best. Yeah, I know. I saw that shit. Yeah, max out Top Step first, and then you can go to like MMFU. It's just the easiest too. There's no 40% consistency rule. Like, bro, you can make as much as you want. It's literally just 5 days, $200. Boom. I don't know about Fund the Next. I haven't really looked into them. You can withdraw half your profits on Top Step until you get 30 days. 30 days of $200 profits. Then you can withdraw as much as you want. You can withdraw all of it if you wanted to. Essentially, you get to like whatever you request to withdraw, you get all of it. I remember the Forex prop firms, bro. They were like, I liked them a bit better, to be fair. Like you had 10% drawdown, most of them. It was 2 phases to pass, but like you get 80% of what you request. Like it was like kind of nice, not gonna lie. But it's really just FTMO. The other ones are so sketch, bro. I trade indices, oil and gold mainly, but I do trade other assets because that's not you know NQ and ES is basically that is indices. They're all the same. That's just the CFD version. So I do trade NAS 100, US 500 technically. What is the Ghost Air Valley Gap? I have no idea. Yeah. No, it does not let you hold trade overnight. Not Top Step. Not unless you trade through news though. I think. If I remember. Yeah, I will trade through news. Especially like majority of the time I let it pass, but it's like a low impact news. Like you can just enter like for it. It's not gonna like really affect actually. How do you trade breakaway gaps? I actually like to see a breakaway gap at the point. So like this whole stream where I've been going over like um manipulation of highs and lows. The first fairly gap that forms, ideally, if that's a breakaway gap, we form an opposing candle like above it. Basically, I'm using that opposing candle to like protect, basically to anticipate that fair value gap won't hold. And you want to see a breakaway gap ideally because it just shows strength in the market. It shows like a willingness to trade away. I know I need to drink water, dude. What is your model? I don't have a name for my model. Some people like made a name for it, but that's a joke. Breakaway gap, yeah. All right, this is my last. It's not like the best. It's not like the most necessary concept ever, dude. But okay, this is definitely not gonna have a breakaway gap. It's like so we're gonna see them a lot on like lower time frame or something. Five. So this would be like a breakaway gap essentially. I don't want to see price return back to this ideally. Once we close over this down close candle, like I definitely don't want to see it return to the right. Basically, when this swing point forms on the 3 minute.
Okay.
That kind of makes sense. Yeah, I just need to turn the stream on. All right, guys, I'm actually leaving like right now. Right. So, thank you for coming in today. What day is this? Yeah, have a good rest of your weekend. Catch you later.